So, what is up for everyone watching this on the YouTube replay? Hope you're having a great day. The market is not having a good day, or maybe it's just my portfolio, but we have some important earnings today. I think Reddit reports earnings, but most importantly, we have Amazon, Apple, Zillow, GoDaddy, First Solar, Rocket Mortgage, Republic Service, and Cloudflare. So we have MicroStrategy and Coinbase as well. So we got a lot of important names reporting today, and that's in about 45 minutes. So if you're watching this on the YouTube replay, about 45 minutes, and that's when we get to all the excitement. But for now, we're going to go analyze a bunch of stocks. I'll give you a quick portfolio update. Let me start over here with our Robinhood portfolio. This is known as our dividend only portfolio. If you look in the top left, it's called dividend only. Hey, what up, Looney? Good to see you, friend. Uh-oh. Well, hey, if it's lagging, sorry. Well, anyway, check this out right here. Our Robinhood, our main account, we're down 1.83% on the day. And here's our total percent change on every stock in here. So luckily, we are green on every stock, all of them except CSL right here. We are down on them. What happened to Sprouts Farmers Market? Yeah, Sprouts Farmers Market reported earnings, and the earnings were not good. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account. And actually, one of our stocks in here is up like crazy. Perimeter Solutions, ticker symbol PRM, is up 22% of the day. So we're chilling with that name right now. So yeah, that's our Robinhood portfolio, but yeah, mostly down because of also Meta. If we look at Meta specifically, they're down 11%. The only thing green is Google, and Google really did have some phenomenal earnings. You know, not financial advice. I would put Meta on your watch list to potentially buy the dip on, because Meta did have some good numbers. When you exclude the little one-time tax payment they had to have, a little one-time adjustment. Yeah, I agree, Clem. Buy the dip on Meta. They're such a great company. Then we have our Webull account. If you look at the top middle there, we're down 3% on the day. So yeah, we're down bad. Disney is like our only stock that's green on the day. Here's what's red. Mostly Sprouts Farmers Market, down $250. We're down 42% on our entire position, or $500. Yo, hit the like button on the stream for me to help me out. You ready for Reddit? Yo, Reddit will be so exciting. They're already down 7% on the day. So did the numbers get leaked or something, or is it just the terrible momentum of today? I don't know, but yeah, that should also be fun to watch. So it looks like there's a lot of red, and also there's a lot of red. Oh my goodness, dude, I'm gonna have to fix this. I just realized we're not even gonna be able to go on our Moomoo portfolio. Oh my goodness, there's something that just changed, and like I'm not able to share my Moomoo portfolio on while I'm sharing my screen anymore. So I'm gonna have to fix that. Wait, that's actually so disappointing. All right, so actually, I might have to go get on my other phone. I completely forgot. That's a whole nother headache I gotta worry about. Okay. Actually, that's all right. We'll just go on my other phone real quick. So hopefully we don't have any more Wi-Fi issues. Yeah, we can look at, yeah, the Chipotle drop was crazy. Let me go to my watch list right here so we can see what stocks like dropped the most. Yeah, check this out right here. Sprouts Farmers Market obviously down 27%. Wolf Speed, I don't know. Oh yeah, this is why Comfort Systems dipped so much on the day. MCOR, ticker symbol EME, fell 17% on the day. And that's like, that stock moves identical to Comfort Systems, but they fell. Yeah, Chipotle's down 17, Roblox is down 15, eBay's down 15. I mean, Meta's down 11, Beyond Meat lost their momentum. Yeah, I predicted this. Yeah, that rally was not sustained on Beyond Meat. Dang, Wingstop is down 10%. There's just a lot of red out there. Even some safety stocks like MO, and then Powell Industries is down 7%. So yeah, a lot of red today. Yeah, I'm not sure what happened to EME. They like barely lowered their guidance, and the stock fell 17%. You know. That's interesting. Is there anything like really green on the day? Let's find out. Yeah, Perimeter Solutions. We do own that one in our Roth IRA, actually. So if we head over here to our Robinhood Roth IRA right here, we're up 22%. That's like our only stock that's like green on the day. But I wish I bought more of that company. But yeah, let's see what else is green while my other phone turns on here. Is this a one-day drop? Hey, yeah, Coco was up, but now it's down. You're right. Yeah, can we look at PayPal? Yeah, we'll look at PayPal too. Meta's on the list. Yeah, I agree, Nanny. So yeah, here I'll show you what reports earnings. So if you're on the YouTube replay, skip in about 40 minutes or whatever. But yeah, Amazon's going to be huge today. I am a shareholder of Amazon, Apple, Zillow. Some of these stocks you probably haven't heard of, but some of they're kind of popular. Zillow, GoDaddy, First Solar, Rocket Mortgage, Rocket Companies, Republic Service, Cloudflare, MicroStrategy, and Coinbase. So yeah, that'll be really interesting to watch. But yeah, in the meantime, let's go look at some of y'all's stocks. And I'm going to pull up my other phone here so I can actually show you guys my Moomoo portfolio and we can do some analysis. Yes. Yeah. RIP my Sprouts Farmers position. All right. So let me connect this here if this will work, please. Perfect. Okay. Wait, now there we go. Wait, I glitched it. Wait, I tried to connect my other phone at the same time. There we go. All right, now check out how down bad our Moomoo portfolio is. We're down 3.15%. This is known as our buy and never sell portfolio, where if you look in the top left, once I buy a stock in here, I legit try and never sell it. So the reason Comfort Systems is down basically 5% is because of EME stock, MCore, or we could just blame it on the whole market's momentum because just everything's down today. Like Powell Industries is down 7%, but that's after their insane rally. Like if we zoom out on the weekly, they've still done phenomenal, pretty close to an all-time high. So thoughts on the Discord IPO? That would be really interesting. Another stock, yeah. So Amazon reports earnings in a couple minutes, but we also Coca-Cola Consolidated reported this morning. They had great numbers. I'm actually looking to buy more shares of this stock, even though I'm already up so much in that position. So let's look at Rocket Lab right here. What up, Tommy? Hope y'all are having a great day. We'll look at some of these right here. We'll look at Reddit too. Yeah, I'm so sorry with all the delays here. We're finally back. Our phone's working. So here's Rocket Lab. This is a space stock, and it's my favorite space one out of all of them that exist. You know, Lunar isn't great. ASTS is still basically a startup. But if we go right here to this company, Rocket Lab, this is some real growth on their space systems revenue. It's up 27% after it grew 94. So they're on a streak of growth, and not just on their space systems, but also their launch services. It's at a record 46 mil, up 60% year over year. That's what I think justifies the high PE on this one. I certainly wouldn't touch it at this valuation. It definitely looks overvalued here, but those are some good numbers, and they're beating on analyst expectations. That's the orange line. Every quarter, they're beating on expectations. They're still losing 50 mil of net income a quarter, but I know they're doing some new partnerships. Rocket Lab completes integration of NASA thing. All right, so yeah, that's Rocket Lab. I wouldn't buy it. I wouldn't have it as a huge size position, but they're a nice momentum name and with good numbers. My SPGI and Eli Lilly did well today. Yeah, I love Eli Lilly. So check this out. I'll cover Eli Lilly because I think this is such a great healthcare company. If you've never heard of them before, here's what they sell. They basically sell a bunch of different prescriptions. Check this out, like Mounjaro, Zepbound, which is a competitor to Ozempic. But look at their main prescription. I mean, the growth has been phenomenal on this name, up to $3.8 billion of revenue just in this quarter. And not just that one, but also Zepbound. This is their weight loss prescription. It literally went from 175 mil to 2.3 billion, a near 5x year over year. And that's just some of these. I mean, there's so many more we could look at here. But anyway, and they're printing good net income numbers. They just reported earnings today. Check out that big beat. Wow. Analysts expected 16. They reported 17.6. Beat on net income. And they beat on EBITDA by 1.3 billion. That's insane. Yeah, I can see why they're up 5% on the day. Eli Lilly, they're a growth beast. All right, so let's see here. Thoughts on Meta? Yeah, let's look at Meta right here. So Meta, they reported earnings today. So they had this one-time tax adjustment. So or a $15.9 billion tax charge. So if we go to their net income right here, here's how you can always tell if something is a one-time adjustment or if it's real or if that really happened. So obviously we can see the revenue's up 26, but the net income is they always make a bunch of net income, but why did it just, was it actually 2.7 billion? We actually look at the operating profit. Sorry, my Wi-Fi is a little slow today, but there we go. Yeah, the operating profit grew 18% year over year. So basically, they beat expectations when you exclude this one-time little tax adjustment. So yeah, I really do like this company. MetaSigns, yeah, okay. You know, they literally print money. They have a 40% net margin, $2 trillion. Well, not $2 trillion company anymore, but yeah. What's the market cap now? 1.67 trillion. That's nearly the same as Tesla, which is kind of crazy. But yeah, they're just now introducing ads to WhatsApp. They have the new Meta Ray-Bans glasses, which is pretty cool, where you can like scroll through Instagram Reels and stuff. What app is this? Hey, what up? Yeah, Moon. By the way, this is a brokerage where you get stocks on. If you wanted to get it, it's in the link tree in my bio. First link there. Do you know any good HG? Not really, Tommy. Like, or not without knowing more. I so I'm gonna say no. Yeah, hey, we don't really look at crypto on here. I wish I could just give you thoughts on XRP. Like we can pull up XRP, but here's kind of a cool thing about XRP. They don't report numbers. They don't have quarterly earnings reports, so they can't miss on their net income or net margin. So it's kind of a cool. Crypto's cool. Michael. Here's what's so cool about crypto. We're covering this today. It's been about 30 minutes. We get earnings from Coinbase and MicroStrategy. So that should be very interesting. All these other companies report earnings as well. Cloudflare, Republic Services. I'm actually maybe looking to buy that one. It's kind of like a Waste Management, and then some of these other companies, these big ones, of course, Apple and Amazon. You know what? Someone said Apple. Let's do Apple. What up, Smack? Apple, of course. All these Mag 7 stocks are never sells. If you don't own the S&P 500, you got to own some of these individually. Hey, Nikita, no way. Thanks for all the roses there. Is cocoa worth a long-term hold? Absolutely. We'll cover cocoa after this. I have so much good things to say about them. 45% market share for coconut water. I think that market share is just going to, or I think the coconut water market is just going to grow fast every year. So anyway, here's Apple. We'll cover that after this cocoa stock. So here's Apple right here. This, of course, Mag 7, they own the iPhone. Literally, the iPhone sales are half of their entire business. 47% of the sales, they sell the hardware. But then they have this is the most valuable part of Apple, their services business, the iCloud, and also the App Store. So whenever you go spend $100 in the App Store, or like $100 on gems or something, Apple keeps $30 of that as a royalty. Sip my water here, sorry. So yeah, this business is growing like crazy. It's nearly 100 billion of annual revenue for them. Then they have the Mac sales, the wearables, the iPad sales, and this is also why they're a bit affected by tariffs. 36% of the revenue comes from the United States. I always thought it was more than that. EU's 26%, 17% is China, 20% of all of stuff manufactured of Apple's products are manufactured in China. But yeah, they print money. Look at this net income right here. Literally 25 to 35 billion in net income a quarter. You also get a small dividend, but it grows every year, safe payout ratio. They do insane share buybacks, largest share buyback program of any stock in the world. They spend $100 billion a year on share buybacks. Yeah, you heard that right. So if you look at the top, they literally spend like 20 to 25 billion in net income every quarter on share buybacks. So that's why the stock doesn't go down. They just buy it back. Okay, so what website? Yeah, hey, by the way, this is a broker where you buy stocks on. It's in the link tree in my bio, very first link there. Someone said, what do buybacks do? Ooh, so let me pull that up for you real quicker. Let me start with this stock right here. So here's what share buybacks do for you. So whenever a company buys back their own shares, there's less shares that exist, so it gives you more ownership in the company and more net income per share. So if we go to this right here, the net income on this random company, the net income fell 13%. The net income fell 13%. But the net income per share is only down by 6%. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes it is the share part of the ratio. So it literally makes the EPS artificially go up, which makes the PE ratio artificially go down. It makes the dividend cost less. In simple terms, it forces the stock to go up whenever a company does share buybacks. Now, they can poorly time. It doesn't always. So anyway, here's Cocoa right here, Vita Coco. We just bought a whole pack of their water again today. Yeah, hey, what up, Nemo? We'll look at STX next. Yeah, Microsoft is a great DCA stock. 33 forward PE on Microsoft. It's fair even right now if you plan to never sell it. Hey, remind me to look at SoFi too. So yeah, here's Vita Coco. All they do is just basically sell coconut water. And they literally have the largest market share for coconut water, 45% market share. And I just am bullish on the whole coconut water industry. We look at their sales. The revenue for their Vita coconut water grew 25% year over year. So the growth is back. I love to see it. They have no debt at all. well. Completely debt-free company, so no debt on the books. That takes a lot of risk off the table, and they make net income every quarter. Now, I don't love the beverage industry, super competitive, but this is like the leader of the coconut water industry because they're at 45% market share, no debt, making net income every quarter, and they're just now getting net income positive. But anywho, that's what I like so much. And check out this quarter right here. They just reported numbers. This is why they're on my watch list. Phenomenal numbers. I mean, analysts expected 156. They did 182. Analysts expected 30 cents. They did 40. EBITDA of 22. They reported 28. So it really was a good beat on every metric there, triple beat. So they're falling just probably because of the momentum of the day. Because really what we saw today, a lot of consumer stocks are really been getting hit. Chipotle came out today and said the consumer's in a crisis. If we actually go to my watch list right here. No. To percent change. There we go. Yeah, Chipotle's down 17%. They literally said the consumer is in a crisis, which I don't know why they use crisis word, but that can't be good. Yeah, here's what we get today. Literally in 30 minutes exactly, we get all these numbers. Actually, Apple is at 4:30, so that one's in exactly an hour. But Amazon's right at the bell, and all these other companies as well. Coinbase, MicroStrategy, Cloudflare, Rocket Mortgage. We'll see how the interest rate sensitive sectors are doing, like Rocket Mortgage. We'll see how Zillow's doing as well. GoDaddy with the domain names, and First Solar to see how Solar's doing. We'll just get a lot of insight in 30 minutes, and hopefully that'll send the market back up because the market is trending down a bit right now. What company is this and how much per share? I forgot what company we were looking at, but by the way, best way to support me, I'm also streaming on YouTube. If you missed anything, you can also replay it on the YouTube stream. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. So yeah, wait, Nemo, we got to get to STX, then we'll get to Amazon stock. Yeah, remind me to get to Amazon. Do you predict up or down? I'm going to hope Amazon goes up just because I'm a shareholder, but I guess we'll find out what happens there. So here's Seagate Technology. Wow. Yeah, this one's in the S&P 500. These are monthly candlesticks. In the past 6 months, they've tripled. So insane stock price appreciation on them. Manufacturing distribution of storage solutions. Well, we can see that they've been beating on expectations every quarter, and the analysts are expecting the revenue. Oh, that's the EBITDA we're looking at. Sorry. So here's the revenue. Yeah, they beat on revenue. They big beat on EPS. I'm almost like a 30% beat on EPS. That's great. Yeah, look at these net income numbers. They're printing money. 550 mil in net income this quarter. Yeah, what are their margins? Yeah, look at their gross margin expansion. It grew from 33 to 39. And that's all this is why the stock has gone up so much. The gross margin went from 23 to 35 to 39. And their net margin went from 14 to 20. Anywho, they print money. I can see why this one's doing so well. So let's pull up Amazon right here. The legit ETF in one. I love this stock. So why do you use different apps? Just because I have a different goal with each app right here. Like this one right here. We haven't even looked at this account yet. Yeah, we're down 3.3% of the day. You'll hit the like on the stream for me because we're down bad today. From Sprouts Farmers Market, we're down 26% on them. AMD's down, Reddit's down 7, Futu 4, Day 5, SoFi 5, Reddit. Our portfolio is taken. Our risk on, this is our risk on portfolio. We have very few names that are green, and we also have our Robinhood portfolio, which is known as our dividend only account, where we're also at an intraday low right now. Yikes! But yeah, hey. By the way, if you want to hit the follow button, we stream every single day, and I sell nothing. Yeah, watch out for people impersonating me. I'll never follow you, DM you. Not in a mean way. I literally I sell nothing. I have no course book, WhatsApp, Telegram, and I'll never follow you. Nothing like that. So anyway, here's Amazon. Let's get to Amazon because I love this stock right here. They report earnings today. So if you buy it now, you're pretty much betting into earnings. And this is a stock, even if you buy it now, if you have the intention to never sell it, it's worth buying. I just bought a share a couple of days ago on the dip. I try to buy it on every dip I see. Those are all my buy orders that you see. So let's go to their numbers right here, because a lot of people know Amazon for their online stores, their online website. But actually, used to break it down for us. When can I see this? Yeah, look at this. We go right here. 40% of the revenue is their online stores, and then they have their third-party seller services, the logistic fees they take, and then the most valuable part of Amazon is actually their AWS, Amazon Web Services cloud business. Remember the AWS outage that just happened? It kind of revealed how many companies rely on Amazon. Just this Amazon cloud business, web services, is over $100 billion of annual revenue, $31 billion just this quarter. The growth rates are insane, and that's their highest margin business. Then they're in the subscription service, the Twitch Prime stuff, and the Amazon Prime. They have advertised. They're an advertising play. They're literally a grocery store advertising play, subscription play, cloud play, like literally everything in one: e-commerce play, book play, robotics play, drone play, net margin expansion play, AI play. I mean, look at these net income numbers, or specifically like the margin expansion. If you look at the revenue's up 13, but the net income is up 35. They're doing 15 to 20 bill in net income a quarter, and at this growth rate, what's it going to be? If we go to their net margin right here, their net margin, was single. It was tough to buy Amazon back here, single digit margins, but now it's double digits. And here's Amazon's also releasing, or just released, that they're not firing anyone, but they're not going to need 100,000 future jobs because of their robotics division. I really feel like the most beneficiaries of AI is going to be corporations like Amazon, who can just robot replace the workers. What up? Yeah. Hey, by the way, what app are you? Yeah. Hey, this is a brokerage right here where you get stocks on. Buy stocks on. If you want to get it, it's in the link tree in my bio. Very first link there. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. By the way, all these brokerages are all linked up there, or not sure which one you're talking about. They're all affiliate links. So if you want to get any of them. But my favorite one is this one. It's completely free, costs nothing, and it's my favorite one to do analysis on and buy stocks on. And I keep my idle cash in here. Link tree in my bio, first link. Okay, so let's see here. So buy puts on Amazon. Okay, only U.S. stock market or other countries as well. I can look at other stocks. Reddit stock. Oh, Plasma. What up, dude? Thoughts on GRMN stock. Then we'll get to Reddit, because Reddit also reports earnings today. By the way, here's all the list of companies that report today: Amazon, Apple, Zillow, GoDaddy, and this is in literally 20 minutes. All these companies report. Actually, Apple is in about 50 minutes, but yeah, Coinbase, MicroStrategy, Cloudflare, huge cybersecurity play. Like literally, if you didn't know, 17% of all global internet traffic goes through Cloudflare in one way or another. I can't more expensive than Palantir, than 8peg. So super expensive, but they're interesting. Well, anyway, let's go to Garmin right here. They're down on the day, they really gapped down these past 5 days. So they reported earnings. Let's go see what their earnings were, because that usually explains why they gapped down. Looks like we don't get, we do. So they missed on revenue, just slightly. They missed on revenue. We don't get EPS projections for the future. That looks weird. And they missed on EBITDA slightly. They still print money. That's why this is still a good company, but it looks like the growth just slowed a little. Yeah, the revenue's up 11, but the operating this is still good. I mean, it's holding on to these gains. I mean, I would maybe look. I certainly wouldn't sell out of this company. You get a 1.5% dividend yield. They're in fitness, outdoor, marine, aviation. Well, looks like they're really diversified. I like that they're diversified. So anyway, that's interesting. Yeah, I like their numbers. They're printing net income. Ooh, someone said APLD. So APLD, that's actually a stock. You know who owns them? Is NVIDIA. So NVIDIA literally is so big that they own some individual stocks. Let me pull them up actually. And there we go. NVIDIA portfolio. So yeah, their largest holding is CoreWeave, but then the second largest holding is APLD. So let's check this out right here. We have not looked at Sprouts Farmers Market. We'll pull up Sprouts Farmers Market as well. Any words? Hey, we just looked at Apple. What up, Ferrari? Yeah, I like that logo. I just bought some Ferrari stock too. So here's APLD. This is a company that just had great numbers. That's why they gapped up so much on their earnings day. We can see what the analysts expected right here. They expected 45 mil, and they reported 64 mil. This is your data center hosting play. NVIDIA does own them, and just because NVIDIA owns them doesn't mean you should. But I do like, if you're looking exposure for data centers, this could be one. They just had a nice beat on revenue, not just on revenue, but on EPS as well. Analysts expected them to lose 13 cents. They only lost 7, so they lost less than expected and made more than expected. So that's why they've kind of had. That's what sustains this rally, in my opinion. I wouldn't buy it here. I wouldn't have it as a huge size position either. But what happens is, again, this is a brokerage where you get stocks on and stuff. If you want to get it, it's in the link tree in my bio, very first link there. And actually, going back to APLD, let me see if there's any news down here, because they give like the weekly news. APLD completes 50 megawatt and you're right, $5 billion lease agreement, results with 84% revenue growth. Yeah, that was a bit ago. Anywho, yeah, that's APLD for you. All right. Let's look at Sprouts Farmers Market. Let's go ahead and look at this one. So yeah, this is the grocery store stock that just tanked my portfolio today. Check this out. We are down 250 bucks on them, or 42% all time on Sprouts Farmers Market. So hit the like on the stream for because we're down bad. That sent our portfolio up here down 3.5. Here, yo, I love being fully transparent. Look at this. All time open profit and loss. We're only up 20% all time in here. We're down 3.5% on the day. RIP. A lot of that from this stock right here. And they actually had some good numbers. Like the numbers weren't so bad to justify a 28% decrease, but like here's what they did miss on revenue. Look at this. Analysts expected 2.22. They only reported 2.2. They actually beat on EPS, so they beat on net income, and they beat on EBITDA. So it was a slight miss on revenue, which doesn't even bother me. Like that's still great. If we look at the revenue, this is the most recent quarter. The revenue's up 13, the net income's up 31. They still expanded their margins 15%. And this is the number you look at for these grocery stores, the net margin. That's great. Yeah, no, I only have $5 of buying power. Well, I'll deposit later, but I might actually go buy some more Sprouts Farmers Market when this stream ends or tomorrow. Okay. Right. Oh, yo, what up, Hendrik? Ooh, do you think Reddit or Oracle is buyable? Let's look at Reddit right here. And yo, if the stream is lagging, it's my fault. Yo, my internet is like terrible today, so I apologize. I'm gonna blame it on AWS, but it's probably just my terrible Wi-Fi. Okay, Reddit, please. Okay, it says we're good now. Okay, it's back to green. Perfect. So, okay, we're good. Here's Reddit stock right here. I do own this one. I'm up like 100% on them. Hey, Vanka, no way. Hey, man, what do you think of Apple? Hey, yeah, we just looked at Apple. We'll look at them right before earnings as well. So Apple reports earnings or actually in 40 minutes exactly. So we'll cover their earnings live. So yeah, here's Reddit right here, completely debt-free company. You know, a lot of people think Reddit is just a meme stock, but they have great numbers. Check this out if you don't believe me. This is why they're not a meme stock. This is insane growth. If you look at the revenue's up 78% after it grew 53. After grew 23. This is what we're going to focus on. Their ARPU, their average revenue per user grew 48%. That's why they gapped up so much. Like I'm talking last quarter, these were some gangbuster earnings. If they can just continue the momentum they had of last quarter, I mean, this stock is probably going to go up double digits. And their net income, they're making net income every quarter, highest net income ever. And completely debt free, like I said, no debt on the books at all. And they're beating on expectations every quarter. So it's not like analysts were expecting this. Like analysts expected 425, they did 499. Analysts expected 18 cents. They tripled that at 45 cents. An EBITDA of 18, they did 67 at 4x. Yo, shout out to the homie, Maddie, dude, with the 25 Ron. Yo, I hope you're having a great day, dude. You just made my day better. Dude, thanks so much for that. I really appreciate that. If you got a stock you want me to look at, let me know before earnings, because in 20 minutes, we're going to be covering all the earnings that come out. It'll be really fun. We never do these kind of streams because we don't get earnings that often. But yeah, anyway, Reddit's a beast of a company. Full disclosure, I do own them. Here, I'll show you that. Yeah, we're down 7% on the day, but all time, we're up 103% on them. We bought them actually during this April dip, or the dip at the beginning of this year. So yeah, we bought all our shares on that day, and we've kind of, we got to go get the charger actually. But yeah. Okay. Yeah, these are all the companies that report: Amazon, Apple, Zillow, GoDaddy, First Solar, Rocket Mortgage. We'll see how the interest rate sensitive names, and then MicroStrategy, Coinbase, Cloudflare. Pretty cool. Okay. Yeah, sorry about the lag there. Yeah. Yeah, my battery is low. Yeah. All right. C Union, what up, dude? He said Taiwan Semi. I love this company right here. You know, this is another stock I never sell. They actually so a big risk about this company is if you didn't know, NVIDIA just designs the chips. You know, Taiwan Uh, Taiwan Semiconductor actually manufactures NVIDIA chips for them in Taiwan. But now, literally last week, the first ever Blackwell chip was just made in their Phoenix facility. So they have a fab in America now, which is good. But yeah, here's Taiwan Semi right here. Here's why this stock, in my opinion, is a phenomenal never sell. Yeah, we can see their market share for these like wafer chips, 71% market share, up from 62%. They just announced some more price increases. But check out this net income. This is the unbelievable part. And we've converted the currency from Taiwan currency to USD. They legit make 10 to 20 billion of net income every quarter. I mean, they did 17 billion just this quarter, up 42%. Like that's insane, the net income they make. And you get a great yield, a 1% dividend. Let's see if there's any news down here. Taiwan splits AI5 chip production between Taiwan Semi and Samsung. Okay, anyway. Yeah, this is a great stock. I mean, those net income numbers are great. Yeah, I do own AMD as well. Hey, what up, Wasanator? What up, dude? He said UPS stock. Hey, this is kind of a dividend play. Hey, we'll look at Kenvu after this. First Solar will be interesting. Yeah. Roblox. Oh, yeah, we got to do SoFi after this, too. I love SoFi stock. Chris said he picked up Meta. I think that's a great long-term move. If you have the intention to never sell Meta, it's worth buying right now. Like, that's a quality stock, like with good numbers that just got unfortunately hit by a one-time tax adjustment. But anyway, here's UPS right here. Actually, you know what? They actually did have some good numbers because they were saying how they were able to raise the price of tariffs onto the consumer. So they actually had some good EPS beats. My brother orders a bunch of packages and he just filled out like 3 tariff forms they sent him. And I'm like, are you, I don't know what you're doing there paying those. But yeah, UPS they had a good quarter. But here's what still concerns me about this company, why I still wouldn't buy them. If we look at their net income, they actually still couldn't afford the dividend this quarter. Notice the past 3 quarters, they made 1.3 billion of net income this quarter. Remember that number. They made 1.3 billion in net income. Well, the dividend cost $1.35 billion exactly. So they literally could not afford the dividend for the past 3 quarters. That's the only thing that I don't love. The revenue's down 3.7 like the sales, the growth is gone. The revenue's down 3.7, net income's down 15, which means the margins are falling. But you get the nice dividend. You get the 6.88% dividend, but I think it might be a little bit at risk. So, yeah, if you like UPS for like their actual business model, I'd probably go with an Amazon over that one. Looks like Amazon's down 3% now. Yikes, something just happened with Amazon. Did the numbers get leaked? I don't know. But nasty candlestick there. Hey, I'm ready to buy the dip more in Amazon because I want to get it up to that psychological 15 shares. Make it perfect. Should I buy Amazon before? Yeah, hey, if you buy Amazon, it's kind of like betting before earnings. If you never sell it, I think it's worth it. Hey, what up, Catherine? How's it going? So let's see. Hello, are you from America? Yeah, hey, what up? I am. Why is everything dipping? Let me actually go check on the Qs real quick. Yikes, look at my main portfolio. Or actually, this isn't even our main one anymore because my other one grew out of that. But yeah, the Qs are at a new intraday low right now. Maybe there's just some nervousness going into Apple and Amazon's earnings. Who knows? That's why I wouldn't really be too concerned. We're really just waiting for those numbers from Apple and Amazon. Yeah, and we get some other companies as well. Here's some stocks that already have tanked today. Sprouts Farmers Market, MCOR, Chipotle. These are your consumer Sprouts Farmers Market, Chipotle. Like the consumer isn't doing great apparently. eBay, Carvana. Like this is textbook, like literally all your consumer discretionaries like Carvana, eBay, Chipotle, Sprouts Farmers Market, like your super discretionary names are tanking today. So it looks like the consumer isn't doing too great. That might be slipping over to Amazon right now. Who knows? But yeah, anyway, we got some fun earnings. Coinbase, MicroStrategy, Cloudflare, Republic Service, which is like a waste management, Rocket Mortgage, interest rate sensitive play. And these are all in 15 minutes exactly. So yeah, we'll come back in 15 minutes. Oh, I need to add Reddit to that list as well. I keep forgetting to do that. You know what? Let me do that right now. Reddit. Oh, we got to remove it and then re-add it to the watches. All right, let's look at some of y'all stocks before we get to earnings. Okay. Hey, what up, Celery? Good to see you. Yeah, let's look at SoFi real quick. So yeah, SoFi, their earnings were so good. Like their earnings were better than I thought. Now the stock is still like ridiculously overvalued. Yeah, hey, if UPS cut their dividend, I think that'd be a good thing. Investors wouldn't like it short term, but long term, I think they would. But anyway, here's SoFi right here. Let's see if there's any news down here. Raises full year guidance. Yeah, their earnings were great. You know what? Let me just go to their numbers right here. Here's why SoFi isn't a meme stock. They're a growth stock. If we go right here to their financial services right here, they're a fintech. They have their own banking charter. Check out the growth. Like this is insane. The revenue's up 105. After grew 80. After grew 222, after grew 80. Like they're on a streak of growth. No analyst expected that, and we can actually see the analyst expectations. That's down here, the orange line. And as we can see, every quarter they beat. You know, they beat on revenue every quarter. They beat on EPS, which is net income every quarter, and on EBIT every quarter. This is why I think people are starting to take SoFi serious. They're printing money, easily over 100 million in net income a quarter, and it's just supposed to keep on growing more and more. The top line grows. Like this is a growth name, but it's still overvalued right here. And I'm a shareholder. I'm up like 5x on them still. Let me see here. Yeah, I own them in my risk on portfolio. We're down 3.6% of the day. Yeah, Sprouts Farmers Market tanked us, but let's see our SoFi. Yeah, we're up 4x on SoFi, or nearly 5x. But yeah, we've just been. I regret every share I've ever sold of SoFi. But yeah, we bought all our shares like way back here, and we've kind of just been diamond handing ever since. Well, someone's at my doorbell. Okay, someone's getting it. Okay, that's good. All right. Let's see. Google stock. Google almost at 300. Yeah, Google had phenomenal numbers. Should we almost go look at them real quickly? I'm talking like their numbers were so good. Hey, Brian, what up, dude? Hope you're having a great day. And Phil as well. Phil said NEE. So what software are you using? Yeah, hey, these are all brokerages. I'm not sure what all these brokerages or all these apps I'm using are all in the link tree in my bio. Very first link in the link tree in my bio, best one, free one. But anyway, here's NextEra Energy. They just opened a nuclear plant with Google, so they actually signed a nuclear. Or they opened up a nuclear plant. Yeah, check it out at the very top here. NextEra Energy and Google partner on $9 billion nuclear plant restart project. NextEra Energy announces 10% annual dividend growth plan. So yeah, this is a nice utility dividend growth play. If you look at the dividend, you get a 2.7% dividend. They raise the dividend every year. A fair 25 PE. The PE is actually a little bit lower than this. It's like a 22 PE. They own Florida Power and Light. If you've heard of that, or if you live in Florida, you probably heard of them. Your utility bills through them. But yeah, they're a regulated utility, which is pretty cool. Yeah. Yeah. Oh shoot. Yeah, my battery. Let me go get my charger. Oh, okay. Let's see now. Oh yeah. Hey, AMPX stock is pretty cool. I do like AMPX. Yo, what up, Alex? Thanks for the 20 roses, Alex. He says Amazon is still going down. Big bull run incoming. Buy the gap. Yeah, I agree, dude. Amazon. If you're planning on never selling, you should buy them. So yeah, NextEra Energy prints money. Actually, they had a little one-time adjustment. It says they only did 400 mil that quarter. They actually did pretty much 2 billion. So yeah, they do like 2 bill a quarter. They're great. But they're regulated, so they'll probably only total return. You probably should only get like 7 to 8% total returns a year on them. They're actually the largest utility play out there. If we just go to the VPU utilities ETF VPU, this literally historically just returns. This doesn't include the 2.5% dividend it returns every year as well. So the chart actually is slightly better when you include the dividend. But this literally the utilities, especially the regulated ones, even if they don't get a 6-7% return a year, the government gives them that. So yeah, that's what's cool about them. This ETF right here, NextEra Energy, is the largest holding in this one. My favorite one is actually CEG, Constellation Energy, the unregulated utility. I think it'll be a little bit more growthy. That's why I picked up this name. They're actually the largest nuclear name out there. They own 30% plus of all the US's nuclear reactors. That's CEG. But hey, NEE did just open up that new reactor, planning on a restart one with Google. Kind of cool. JC, what up? FRMI, what is that one? So Fermi, hey, they're actually on my watch list. They just IPO'd, it looks like. So unfortunately, I'm not probably going to be able to give you too much data because so if we go to the revenue right here, it says they literally just IPO'd. So it looks like, unfortunately, I can't give you too much thoughts on this company. Yeah, It says they're a REIT. Let me go to their website, maybe Rethink Power. Some sort of, it says they're a REIT though. Hyper redundant on power demand. Okay, so some sort of power company. I just need some numbers to look at. GRR has secured a contract showing 1.5 billion. Hey, yeah, I think that's that South Asia data center that they got. Um, Gorilla will meet with Jensen Wong. Oh, really? That's actually kind of cool. So let's see this Gorilla technology right here. Yeah, so this one is still trying to really prove itself because they still don't have much revenue yet. Or let me actually go check that. Actually, no, they do have revenue. Check that out. The revenue is up 76% year over year. We're from 8 mil to 21 mil. That's good. It says they're making money every quarter on that too. I mean, or the actual core business, and they pay taxes and stuff, and it gets slightly negative. But looks like they're making money, and the balance sheet's growing. The liabilities are staying the same. So the maybe from issuing shares. Nah, actually, they're pretty interesting. Yeah, I'd put them on the watch. The security convergence. Yeah, apparently, I remember a long time ago, or not that long ago, but they had some 1.5 billion. Gorilla signs $1.4 billion contract with Freyr Singapore to build a South Asia AI data center, something like that. Anyway, there you go. I'd be careful with that one. I would have put a lot of money in that one. Hey, what up, Brian? Good to see you. I'm holding steady today. Tech down, gold mining up. Hey, nice. So, hmm. Oh, let's look at GLW right here. This is Corning. They're kind of like a competitor to APH. Yeah, APH long term. I'm only more bullish on APH today after CommScope's numbers. Actually, kind of speaking of this stock, there's another company called CommScope, and Amphenol is buying their connectivity and cable business. So they have these three businesses right here, and Amphenol is actually acquiring this business. And today, this company reported earnings, and they're up 7% because their cable business grew 50% year over year, and their adjusted EBITDA margin from that segment. It's like they sold Amphenol this business like right as it, but Amphenol got a great deal on it. So, but that stock's still up nonetheless. It saved the company from bankruptcy. This is a zombie company. I mean, they had like impossible to pay off all the debt, but okay, but Amphenol is paying off all their debt for them. Amphenol is paying off their $8 billion of debt. Anyway, Amphenol and GLW are two very similar stocks. Actually, I think if we pull up the versus overlay, we'll pull up GLW. Let's pull up Amphenol right here. Both great stocks. APH. Yeah, check that out. As you can see, actually, Amphenol's done a little better, but they normally rhyme together. They like bottom the same day and stuff like that. So anywho, these are your infrastructure plays. You know, I heard someone call Amphenol the nervous system of AI, but yeah, these optical communications business is booming. All right, so let's see. Oh wait, I didn't really give you any thoughts on them. Yeah, GLW. I love the business. Same with Amphenol as well. They've been beating on expectations like crazy. Let's see right here. Yeah, like this in last quarter, they beat on revenue both quarters. They did miss on net income slightly this quarter, but they still make a good amount of net income, like 500 mil a quarter. More earnings in 8 minutes, 5 minutes away. Yep. So for everyone on the stream, in 5 minutes, we get company Apple's in 35 minutes, sadly, but right in 5 minutes, we get Reddit, Amazon, Zillow, GoDaddy, First Solar, Rocket, Cloudflare, MicroStrategy, Coinbase. All these names report earnings, and they're either going to go up a bunch or down a bunch. So that's what I love. You know, all right. Earnings days are so important because it either moves the stock up a bunch or down a bunch. As we can see, these are the earnings from yesterday. Tanked Sprouts Farmers Market 26%. It tanked Chipotle 18. It sent down Roblox and eBay 15 each. This is like a message that the consumer is kind of weak right now. Super discretionary grocery store, Chipotle, Roblox, eBay, Carvana, super discretionary names are all getting slapped right now. Generac, Dave, Murphy. I'm so looking to buy more Murphy. Heck yeah. Actually, here, I'll show you that real quick. They're actually, we're down on them now in our Moomoo portfolio. We just started our position. As you can see, literally for the first time ever, we bought our shares basically last 2 weeks here. So I'm starting a new position in this company. But yeah, Amazon will be so fun to watch. They're already down 3% on the day. I guess we'll see what happens. Hopefully they can have a huge cloud beat, maybe like Google did. Yeah, Comfort Systems is down 5% on the day. Yeah, look at that. We're down 3.5. And then here, I'll go over my Robinhood portfolio one more time. Yeah, look at this. We're at a new intraday low right now. We're down nearly 2.5%. Yeah, Meta, not financial advice. I'd look into buying the dip on Meta, nibble on it here. Great, never sell stock. CEG's tanking a little bit, but yeah, how are we doing year to date still? So we're still up 15% year to date. I'm not too worried. We earlier this year, we were down 15% year to date. So we're in a much better position. And I think our Roth IRA is green because of Perimeter Solutions. So yeah, we're actually up 1.6%, literally just from this one company that's up 22%. By the way, my Roth IRA is so all over the place and needs to be fixed. Oh, I just bought a new share of Waste Management yesterday. We're up 1% on them. Anyway, okay. All right. By the way, if you want to hit the follow button, we stream every single day. I sell nothing. I have no course, book, WhatsApp, Telegram. I never sell anything. I'll never follow you, DM you, nothing like that. So yeah, I think Reddit reports at 4:05. So yeah, we get ready in 5 minutes. We're gonna have a bunch of earnings. Meta fell insanely. Yeah. So the thing with Meta, actually, let's not look at Meta because they had a one-time tax adjustment. If we look at their net income right here, look at this. They're normally always doing 20 bill, 15 to 20 bill, but they only did 2 bill in net income. You always want to look at the operating profit because that's what they actually did before taxes and before their one-time adjustments. And they just had the one-time adjustment this quarter. So we know that their actual, like the EBIT, as you can see, like the revenue beat expectations. The EBIT, again, had that one-time adjustment, but when you exclude that, because it was $16 billion, they did great. So that's why I'd look into nibbling on them. Yeah, $15.9 billion tax charge that they had. Okay. Spy Puts got me paid. Hey, nice, dude. Duolingo, what up, Fly? Let's do it. Duolingo, this is another software name. This one's also kind of being hurt by the AI thesis. OpenAI came out with a competitor to Duolingo, a language learning app. Also, there was a short study thing that came out on the OpenAI new browser. It's like 50, literally the studies, the OpenAI browser is 50x more vulnerable to phishing, data leaks, and security breaches than Google Chrome. And Google Chrome isn't even that great either, but apparently it's not that. Okay, back to Duolingo though. Duolingo, this is a huge subscription model play if anyone's heard of that language learning app. This is why I put them on the watch list because their numbers are good. Their moat is still being investigated. We don't know. The reason the stock is struggling is because of the future uncertainty. We don't know what the future is going to be, but their numbers are great. Their subscription model, this all reoccurring revenue. The subscription revenue is literally up 46%, after grew 52, after grew 45. So they're on to some insane growth on their subscription revenue. If you don't pay for their subscription, you see ads on their site. And if you go to their advertising revenue, it's up 55% year over year. So they're just growing like crazy, their numbers, and they're the most profitable they've ever been. They're super growthy, making net income every quarter, expanding margins, record free cash flow numbers. So deleveraging the balance sheet. You always focus on the asset to liability ratio because assets go down with liabilities. You got to pay off debt with assets, so. I like Duolingo's numbers. I nibble on them. I wouldn't have it as a huge size position, but honestly, right here at this price, it looks pretty interesting. So yeah, 4 o'clock, the market just closed. Get ready because let me pull up the list here. We got a lot of earnings today. It looks like Reddit's already up 1%. Let me see if that's real. Yeah, so we'll wait for that to load in. But anyway, yeah, in a couple minutes, sometimes the stocks, some of these report at 4:02, so in 2 minutes they'll have numbers. So yeah, and sadly, the Apple's in 30 minutes. So hey, if you want to stick with me here, and we'll be live in 30 minutes exactly. In exactly 30 minutes, we get Apple numbers. They always take 30 minutes, but all these other stocks like Amazon, Reddit, all these other names report in 5 minutes. We'll get Rocket Mortgage to check on how the interest rate sensitive sectors are doing. Cloudflare for cybersecurity. If you don't know, 17% of all global internet traffic goes through Cloudflare in one way or another, but they traded an 8 peg and it's impossible to pay their valuation, I think. MicroStrategy and Coinbase, we'll see how the crypto, assets are doing, MicroStrategy. So yeah, this should be fun. Looks like Amazon, no way. Looks like Amazon numbers are out. They got to be because Amazon's up 5.5%. Let's go. Let's go, Alex. Let's go. Yeah, crispy dude, Sprouts Farmers Market. I'm talking, they did not deserve that much of a dip. But you know what they say, a rising Amazon heals all wounds. Right? A lawyer told me that one time. He said, money heals all wounds. Well, let's see. Yeah, look at Sprouts Farmers Market on the day, down 25% on Sprouts Farmers Market today. And they literally only missed on the revenue metric, and they missed by like 2%. So I'm shocked. But yeah, we'll dig into again. The numbers just came out, so I won't be able to have it for another minute here. But obviously, the market's happy with their numbers. Let's check out our Moomoo portfolio. Let's go. Yeah, Amazon. We're now up 27% on that's actually close to an all-time high, maybe. Wait, 242. What's all-time highs? All-time highs 241. Wait, that might be all-time high. Amazon is like super close to an all-time high right now. Okay, okay, that's Amazon. Let's go see if Dr. Onefly, what up, dude? Hope you're having a great day. Yo, we'll get to all the stocks here in a minute. I apologize. We want to get to some of the numbers. We have First Solar. Their numbers just dropped, it looks like. Again, this is actually my favorite solar play. There's a lot of solar stocks out there like Enphase Energy. I specifically love this one because of their net income. They make good numbers. Like, they're not like a lot of these other solar names lose money, but this one prints a couple hundred mil a quarter. Looks like, but the Inflation Reduction Act that came out a couple years ago really benefited solar, but their incentives and tax incentives just got taken away in October, just like they did to Tesla. Wow, Amazon's up now 10%. I can't wait to see what numbers they reported. Were future, maybe some AWS beat, maybe some Anthropic robotics cut, or I don't know. Can't wait to see what happened there. So in 2 minutes, so we're 2 minutes away from literally all these other names except for Apple. So, or less than 2 minutes. So Cloudflare might be out. I don't know yet. Maybe it's just getting ready, but in literally 1 minute. Oh, Reddit might be out. It looks like Reddit just had a little gap down on their candle. Yikes, down 7% right now. Reddit is down 8% right now. So, hey, yeah, Ant, what up, dude? Yeah, let's go. Amazon's making us money today. All right. Amazon's up 10% again. Apple, we still got to wait 30 minutes for that company. Yeah. Hey, what up, Seuss? Yeah, today was a red day, but I didn't care how red today was because we were all just waiting for earnings. Let me check my Robinhood, but let's go check how this portfolio closed. The market did just close. I don't think that's changing anything. So yeah, our main account, our dividend-only portfolio was down 2.5. Here were the earnings from yesterday, if anyone wasn't here. Google had great numbers. Hopefully they don't do Amazon. Like, Amazon's up 10% right now. Google is up 8%, but then as the day opened, they slowly bled out, but they still are amazing. And Meta right here, Meta, I'd look to buy the dip on, not financial advice. They had good numbers, but a little one-time adjustment to their taxes there. But yeah, Amazon's holding on to the gains, up 11%. I can't wait to see what happens. Let's see what the intelligent comments are saying. Okay. So yeah, let's go, man. Yeah, that's a good stock. Let's see. Reddit's down 5. And then after a couple of minutes here, we'll start looking at some of y'all's stocks individually. We'll go back to the analysis here. We got literally 1 minute away. Or it just hit 405. Literally right now, we should see some movements in these names down here, unless they're at like 420 or something. Rocket Mortgage, hey, this is that interest rate sensitive one. They just acquired Mr. Cooper and Redfin. If anyone's heard of Redfin before, it's kind of like a competitor to Zillow, which reports earnings. But yeah, they acquired Mr. Cooper, which was a phenomenal stock I used to own that I regret selling out of. But they just got acquired by Rocket Mortgage. And they're up 4% right now. So as interest rates go lower, that one should do good. But I'm just shocked about Amazon. Oh, Reddit's barely red anymore. Look at that. Reddit is only down 1.7% now. They at first there was down 8%. So let's go. So yeah, there's always a lot of volatility. See, now Reddit's green. You never know what'll happen with the volatility. First Solar's still red. So all right, we'll come back to here in a minute. So let's look at some of these stocks right here. Yeah, Reddit is down. Looks like it's flat now. Do you own Microsoft? I actually do not own Microsoft. So here, actually, speaking of the interest rate sensitive sectors, here's why I bring that up. Here, I'll show you the interest rate probability tracker right here for anyone who's interested. Oh my gosh, I'm clicking the wrong buttons here. Markets, stocks. Let me scroll down here. Check this out. So we just had our October 29th meeting, and in December, literally not even that long, December 10th, there's literally this actually just went down a bunch. It used to be a 50 basis point cut. Now there's only a 73% chance of a 25 basis point cut on December 10th, not even that far away. And then this is literally, and then on the January 18th meeting, another 57% chance of another 25 basis point cut. So yeah, the FOMC dot plot sees a 3.63% rate. Anyway, we'll see what happens with the interest rate sensitive sectors. Let's see here. Yeah, so here's my Amazon position. We're up 30% on them. I think that's an all-time high. So they're at 246 right now, and all-time high was 243. So yeah, that's a new all-time high on Amazon. And we were watching them today, literally right before earnings. I was like, dang, Amazon's fallen 3%. That's weird. By the okay, let's go see if anything else was reported. Whoa, Reddit's up 10% now. This is what's so cool about earnings and why, like, this, someone got rug pulled. Yo, someone in the chat earlier said Reddit is down with the sad face. And guess what? Don't be sad anymore because Reddit's now up 13%. I can't wait to see what what the comments here are about to say about this. So yeah, I guess they didn't report, but the numbers just came out. Reddit's a phenomenal company with no debt. Here, obviously we don't have the numbers that just dropped, but here's why I own Reddit, full disclosure. Here's what I love about them. I mean, the revenue's up 77 after it grew 53. Like, this revenue growth is insane. Not just revenue, but also real net income. They print net income. This was near over double the expectations. They have no debt at all, completely debt-free company. So Reddit isn't just a meme company. They have real fundamentals, in my opinion. That's why I do own them. Wait, actually, if I click back on Reddit here and I zoom out on the daily, you can see I bought them a while back, but yeah, we have 4 shares of Reddit. We bought them during that dip at the beginning of the year. But yeah, I can't believe it. Amazon's also up 10% right now. Congrats to anyone in Amazon or Reddit. Let's see. And we get Apple earnings in 21 minutes exactly. So in 21 minutes, we'll get Apple's numbers. Looks like Zillow might be out. No one really talks about this company. So that's some real estate company. GoDaddy, this is like a domain name stock. I wonder if their numbers are out. Who knows? Maybe they just don't move. Rocket Mortgage is up 6%. Coinbase, their numbers might have come out. I don't know. I think their numbers might come out in 5 minutes. But yeah, MicroStrategy as well is in 5. Okay, let's. Oh, hey, watch out for the guy in chat there. Hey, yeah, I can get that guy banned. Yeah. By the way, I don't sell anything. I'll never follow you, DM you. Yeah, I have no course book, WhatsApp, nothing like that. So yeah, let's see here. Should I buy NVIDIA stock? Let's go look at NVIDIA right here because NVIDIA doesn't report earnings for a while. So yeah, we'll just do some analysis on NVIDIA stock. Then we'll go back and look at how the stocks are moving. Like, I'm so excited to go back and see how stocks are moving. So here's NVIDIA. Here's why this is a never sell stock, in my opinion. Again, the law of large numbers puts this in a tough position because if you look in the top right, the market cap, they're a $4.9 trillion company. For you to double your money, NVIDIA now has to be worth nearly 10 trillion. So it's a tough double. That's why I actually went with some other semiconductor names. Like, I picked up AMD instead of NVIDIA because I thought it was an easier double. But you could also just buy some of the beneficiaries. Look at that. Now Reddit is now red. Like, this is why earnings are so volatile and crazy. Look at that. Reddit was down 8%. Then it was up 14, and now it's flat. So just crazy, just craziness. So yeah. Anyway, back to NVIDIA right here. Sorry, I kind of got distracted. Huge GPU market share, obviously 24% GPU market share. They have this automotive revenue. Honestly, it's a competitor to Tesla. Like, Lucid uses their automotive software as well. It works great, but it's a big data center play. Like, this is the crazy part, the net income they make. They literally made $26 billion of after-tax net income this quarter. That's after they paid their billions in taxes. So they did $26 billion in net income, up from $16 billion, up from $9 billion. Like, if another company can pull this off, then they also deserve to be worth $5 trillion. Their customers are literally like the most cash-rich companies. Oracle, OpenAI, printing orders, Amazon, Meta, Google, all buying NVIDIA chips. I mean, everyone's buying NVIDIA chips right now. So yeah, again, I think it's a tough double, but I'd go with some of the NVIDIA beneficiaries. Like, I'm looking to buy even more Amphenol stock, like even at like $130 a share. Like, I love that one. They're the ones supplying the copper cables for NVIDIA and their cables for NVIDIA. Yeah, Coca-Cola, someone said normal Coca-Cola. Yo, Coca-Cola Consolidated came out with earnings today. They were originally up 7%, but now they're only up 3.5%. I love that company. They had phenomenal numbers. Oh, let's go back and see how the stocks are moving real quick. So Reddit is up. Oh, Reddit's now down 5%, man. So yeah, that's a lot of volatility on them. Amazon's up 8%. I'm still happy with that, dude. If Amazon just stays at 8% or, 7, 8. Like, I'm super happy with that. It's at all-time highs right now. Like, that's great. Looks like Zillow's up 4 now. GoDaddy's slightly up. Did we get Coinbase? Yeah, Coinbase and MicroStrategy not yet. Or if they're out, the stock just hasn't moved much on the news. So, are you getting Meta on the dip? Yo, I already got Meta stock. Here, I'll show you that real quick. But I am actually looking to potentially buy some more Meta shares. I am still up 26% on my position. If I didn't own Meta before today, I'd be super inclined like to buy the dip on them. But yeah, I love Meta. Yeah, we're down 2.5% on the day in this portfolio. RIP. Hit the like on the stream for me. Oh yeah, we also have a Roth IRA, which is green on the day. If anyone's heard of Perimeter Solutions, they went up 22% on the day, which is cool. So yeah. All right. And then in 18 minutes, we get Apple's numbers. So in 18 minutes from now, that'll be interesting. So anyway, all right, let's keep going here. Let's look at some more stocks. Lost 2K on Beyond Meat. I can't sleep. Oh, dude, that sucks, man. Yeah, yo, I have been there exactly. I lost a bunch of money on ChargePoint when I first started. But now this should hopefully teach you in a super important lesson on here's a stock not to buy the dip on. There's here, like, not financial advice. None of this is, but here's a stock that has good quality fundamentals that I would buy the dip on. Like, if I'm going to buy a stock on a dip, I want to buy a stock on a dip that I believe in, and that if I, for whatever reason, had to hold it forever, I'd happily hold it forever. I want to buy the dip on those kind of stocks, like this one right here. So if you're looking for one that looks RSI super oversold, maybe check out this one. But here's why here's what makes me not want to buy this one. Here, first off, we'll look at the market cap. If we look at the market cap, they're only worth $650 million. So if you kind of think about that, the whole entire company is worth $650 million. In just this quarter, they lost 300 mil, 50 mil, 45 mil, 30 mil. I mean, that's $200 million. Or, well, not, that's like 170 million. That's 20% of the market cap, and they're super leveraged. Look at all this debt they have to pay. They have double the amount of liabilities as assets. And how are you going to pay off all these liabilities when you lose net income every quarter? And the lifeblood of the company, your sales, your revenue is down 20% year over year. After it fell 9%, after it fell another 9%, after it fell 22%. So they're on a losing streak right now. For that reason, I think it's just hard to trust money in this name. Of course, it's always fun to do a short-term little swing trade with some fun money, but as like a buy and hold, I wouldn't trust that one. All right, let's see here. Beyond Meat, yeah, I guess America has responded no to plant-based meat. We see McDonald's stock at all-time highs, and then we can kind of the consumer, this is actually a sign of the consumer's weak right now. Sprouts Farmers Market, super healthy, or consumer discretionary grocery store, Chipotle, eBay, Roblox, Carvana, all your discretionary stocks tank today. Kava, Wingstop, Beyond Meat, Ethan Allen, the furniture company. All these earnings are saying that the consumer's being weak today. Chipotle used the word the consumer's in a crisis, which was kind of crazy. So Chipotle's down 18% because they actually guided for Chipotle. They guided from previously single-digit growth to single-digit negative growth for same-store sales on Chipotle, which isn't great. So they'll be doing 5% less business in every store than they were this same time last year. Yeah, I'm buying Reddit open tomorrow. I want to see the Reddit numbers. I can't wait to see the net income. So yeah, and the free cash flow numbers, we'll check all those numbers out. So yeah, Amazon is going nuts. A great never sell company. They're in my never sell portfolio. So will I be selling or trimming any of my shares? Absolutely not. I'm actually happy. I bought a couple shares of them, or I shared them right before that. Well, not right before their earnings, but oopsie. Why did it just do that? All those buy orders. Every time Amazon's on a dip, I always try and buy this stock because they're literally an ETF in one. I mean, they're literally a UPS, a Walmart, an Oracle Cloud, all in one, an Instacart, subscription play, e-commerce play, book play, robotics play, AI play, cloud play, grocery store subscription, advertising play. I mean, Amazon is a beast of a company. Amazon's coming for the trade desk. You don't want Amazon as your competition. They're literally a trade desk in one, an Instacart, an Oracle, like that. The list goes on. I can't tell you how, this is the reason Amazon is such a beast. If we go down here, So their cash from investing activities, their CFI, if this number is negative, that means they're buying an asset, buying a company, buying new land or whatever, buying new assets to improve the business. You want this to be negative. If this was positive, that means they're selling out of their assets, like they're selling their assets to other people. You don't want that. So the fact that they legit just deploy money into the future, this company doesn't pay you a dividend and they never do share buybacks. Matter of fact, Amazon dilutes you by 1% to 2% every year, and they don't pay a dividend. Unlike every other Mag 7, all the other Mag 7 buys back share except Tesla, but all the other Mag 7 buy back shares and pay dividends. But Amazon doesn't. I love Amazon. Okay. Do you know anyone that uses Cash App? Yeah, Cash App I heard doesn't have great fees, or I just, it's not that great of a brokerage, I don't think, but I've never used it, so I don't know. Do you only buy full shares? No, I'm a fan of buying fractional shares. Yeah, someone said, can we look at Meta? Yeah, Meta's another great one. People are freaking out because of this net income number. Like at first glance, most people look at this and like, whoa, net income down 82% year over year. But this was a one-time adjustment when you more look into it. They had a $15.9 billion one-time tax charge. And they don't really, these are future write-offs. So in the future, they'll be able to write write-offs on this. But anyway, we look at the net income, you really want to blend that with the operating profit because it doesn't include that little one-time adjustment. The business really grew 18% year over year. Revenue hit a record. Cash from operations, what was that actually? Cash from operations was at a record as well. Actually, the most impressive one was Google's numbers. Dude, Google's free cash flow number, you won't believe it. It was like 50 billion. Like Google actually deserves to go back up to 9%. The cash from operations grew 57% to 48 billion. And they invested 27 billion. And so they had in free cash flow, FCF at 24 billion. Anyway, Google, I just can't believe their numbers. They were so good. Yeah, Reddit triple beat apparently. Let's go look at Reddit one more time. Yeah, let's go see how stocks are moving. So Reddit's back green. Look at that. Remember, Reddit was negative. Reddit is just a volatile story. So Reddit's now up 4%. Let's go. Amazon's up close back to 10%. And in exactly 10 minutes from now, we get Apple's earnings. So stay tuned for that if you want, because that'll be fun to watch. Let's see Coinbase. I think their numbers are out. Maybe, I don't know. Coinbase out. Let's see. See subscription. Okay, well, I don't care about that. Anyway, yeah, it looks like their numbers did come out. Coinbase is up 4%. MicroStrategy, even though they report earnings, I don't really know if that moves the stock because they just trade off like the net asset value of all their Bitcoin. Cloudflare numbers might have just dropped. I don't know. Looks like they're only up 1%. They're trading at an 8 peg. They've always been really expensive. Rocket Mortgage. So yeah. Amazon, yeah, Reddit's now up almost 7%. Amazon and Reddit are the real winners so far today. All right. What app is this? Yeah, hey, by the way, I'm not sure what app you were talking about there. By the way, all these are brokerages right here where you buy stocks on. If you wanted to get any of them, they're all in the link tree in my bio. They're all affiliate links too, full disclosure. But yeah, they're all free. I love them. Okay. All right. Ooh. I sold my UNH stock today. I couldn't keep buying the dip. Hey, what up, cousin? UNH right here. I don't blame you for selling this one. There's just a lot of FUD around this name right now, but they did, I think, update their guidance or something. If you go to their EPS right here, yeah, they actually revised this up. Their EPS is going to go from $7 to $1.70, but then it's going to go to $6 again. So actually, it's really not the end of the world. Revenue reaches 113 billion. Well, it's more than that. Okay, weekly brief. Wait, that's from Q2. Okay. Anyway, the future uncertainty, there's a lot of future uncertainty around UNH, because they were overbilling the federal government, giving people that back brace they didn't need so they could collect that commission. We're actually a customer, we use OptumRx. This business has been super growthy. How's that on an annual basis? Yeah, just this business is $133 billion a year. Their main UNH business is $300 billion a year. I mean, the top line is crazy. But yeah, it's their future margins that that are going to be investigated. It's a nice dividend play though. And Warren Buffett just bought the dip on them. Yeah, let me pull it up actually. Warren, actually, I can see why he sold out of it though. If we go to Warren Buffett's most recent moves right here, we go to new. He bought 3 new stocks, and one of them was UNH, United Healthcare. Yeah, I don't own that one. Not looking to buy them either at this price. Or I don't know about that. Or I don't know. Actually, hey, Tommy, I do not own any Microsoft, but I would love to. Microsoft trades at a 33 PE. Netflix to do a stock split? You're kidding me. Is that real? Split stocky? I guess maybe, well, I guess there's one guy who said something, who said split stocky, so maybe that is true. Netflix is all these subscription model kind of apps trade at crazy valuations, Spotify, Netflix, Life 360, like they all trade at nutty valuations, but they have good growth. I mean, they have 300 million premium subscribers, their average monthly revenue per membership is $11.69. If we just go to their net income, this is what's crazy. They print money. I mean, basically 2 billion plus of after-tax net income a quarter. Same with the FCF, which stands for free cash flow, 2 to 3 billion a quarter. So yeah, their gross margins are crazy. It doesn't take much to run Netflix. This is like a year ago, but they rose their prices and introduced an ad tier subscription, and it's worked great for them. All right, let me go back to the earnings here. If anything's moved, I doubt it though. Amazon's still up 10, Reddit's up 5. Anything moved down here? No. Coin is up 3, MicroStrategy 2. All right, nothing crazy yet. All right. So, but in exactly 8 minutes away till Apple earnings, that should be really fun. Should we look at Alibaba, what up, market? Let's look at that. What's in your never sell? Yeah, this is my never sell portfolio right here. Those are all the stocks I got. So let's look at Baba right here. Yeah, after this, we'll check out Apple stock. Maybe we'll do an analysis on them before the earnings. But yeah, Alibaba right here, they're seeing a lot of growth. I know they have their new cloud business that they're growing. Weekly news, please. I guess okay, there we go. Alibaba launches Quark AI product suite with smart glasses. Okay, never mind. There's no news. But Chinese company, you pay the yearly ADR fee, but it's no big deal. They trade at 20 times net income. So they trade at a very low valuation. There are Chinese, but we've converted the currency from Chinese yuan to USD. And they make good money. Check that out. They're pretty much doing, if you average it out, like 4 to 5 billion of after-tax net income a quarter. And they just started paying a dividend, a 0.6% dividend. Alibaba is the one that owns AliExpress, if you've heard of that e-commerce side. It's more business to business than business to consumer, like an Amazon. They're selling to those like Shopify owners that buy their Alibaba stuff in bulk and then sell it. But they also have some other businesses, like their intelligent cloud business. It's up 27% year over year. Not too shabby, and you get a dividend. So yeah, they're one of the better Chinese plays. All right. Apple hit already. Apple out already? No. Apple's numbers aren't out yet. Apple's numbers come out in 5 minutes. Yeah, we can't wait for this. That should be fun. But yeah, Amazon's numbers came out. And all these other names as well. First Solar's red. Stocks aren't really moving that much. The only thing that's really moving is Amazon. Reddit has been flat, but yeah, hey, I can't wait to dig into it. Let me pull up Reddit. Let me see if the earnings have it'll be here on the news tab. It sees Q4 revenue of 6. Oh, that's a big beat on next year's numbers. Q3 EPS of 80 cents. What was it last quarter? So they did 80 cents of EPS. And last quarter, it was 45 cents. So, whoa, they did 160 mil of net income. Yo, we'll have to look into that a little later. They have no debt, too. I really like that stock. So, yeah. Hey, what up, Hill? Good to see you, man. Hope you're having a great day. Market's a bit volatile, but Amazon made my day a little bit better. And Maddie, if you're still in here, thanks again, too, for that. So let me pull up my Robinhood portfolio as well. Yeah, we're down 2.5% here in our main portfolio. We own Meta, so that led to some of the decline. We're down 11.5% on them. But yeah, now we're just waiting for Apple. In exactly 4.5 minutes, we get Apple's numbers. So that should be fun. All right, we can look at 2 more stocks here before we get look at. Do you own Coca-Cola stock? So I actually do not own Coca-Cola, as you know. I actually own COKE, the Coca-Cola bottler, the bottling company, and they look very different. They have a much lower yield, but they had some phenomenal earnings, but the normal Coca-Cola stock, that's a big Buffett play. If you go to Warren Buffett's holdings right here, his largest holding is Apple. That's what you see in a lot of super investors. We go to Nancy Pelosi's portfolio, her largest holding is Apple. Hey, and then Amazon, and then Google. Pelosi has the right picks, apparently, Amazon and Google, and I guess we'll see what happens with Apple today. Or if we go to even Donald Trump, not to get political, but his largest holding besides his own company is Apple. Like, Apple is such a beast of a company. Obviously, a lot of people are locked in the Apple ecosystem. I'm on an Apple iPhone. Anywho, here's Apple stock right here. They we'll look at them in 4 minutes when their numbers come out. Let me get to Coca-Cola real quick. So Coca-Cola is actually 9% of his portfolio. Besides Apple, he owns a lot of the higher yielding names right here. Here's the truth. I don't really expect Coca-Cola to outperform, the tech heavy S&P 500 in the long run, but you get a safe, basically 3% dividend. They raise the dividend every year to keep up with inflation. Here's what you're kind of hoping for. You get the 3% dividend, then you're hoping for 3% in stock price appreciation for a total of, or maybe 3.5. You get like a total percent returns year of around 6 to 7%. Still going to underperform, but it's a really safe stock. I love all their brands, Coke, Sprite, Orange High C, Powerade, Smart Water, Body Armor, the list goes on. So I love all their brands, Monster Energy. What app is that? Hey, by the way, this is a brokerage where you get stocks on. If you wanted to get this or this software, it's in the link tree in my bio, the very first link tree in my bio, very first link there. My voice is cracking. Okay. US or ESCA, then we'll go with Apple's in less than 2 minutes. We get Apple's numbers. So we'll go check that out right there. Yeah, we'll look at Roblox too. Kathy Wood does love Roblox. We can check Kathy Wood's portfolio. Here's Escalade. Looks like a very small company. They're only worth $150 million. So a very small market cap. Sporting goods. So they're a sporting goods store or something, and the revenue is actually down 13% year over year. So just be aware of that, the revenue's down 13. They are still making net income every quarter, but it's 1 to 4 million. So very small numbers, but at least they're profitable. It's not like they're losing money. But yeah, I think the reason the stock is struggling so hard, if we scroll it on the weekly here, is just because, the organic revenue is down 13 after it fell 7, after it fell 28. Whoa. So yeah, they're on a nasty decline, and I don't think they can really afford the dividend either. So they have a 6.5% dividend. Here's what we can tell if they can afford the dividend. So they made 1.8 million of net income. That's so tiny. 1.8 million. Oh, okay. So the dividend cost 2 million. So as long as they make over 2 million in net income, they can afford the dividend. But again, they didn't make that this quarter. And the sales are down. Careful with that one. I just don't love those numbers. Okay, let's go to Apple right here. Their numbers will be out in 60 seconds or less. And here, we already saw some good news today from Amazon. Amazon's up a whopping 9.5%. Incredible. To a new all-time high. That's an all-time high, 247. That's a crazy new all-time high. Never been close. Reddit's still struggling. Reddit is now negative. I guess we'll see and figure out what exactly is causing a decline there. It looks like MicroStrategy is now up 6%. I wonder what happened there. Maybe we can check out the news tab here. Nope, no news. Coinbase is now slipping a little bit. All right. We literally, it just hit 430. We should get the numbers right now on Apple. I think my Wi-Fi just cut out. Well, that's not good. Apple's down 3.5. Yo, I kid you not, right at 4:30, my Wi-Fi just the kilobytes of the stream, the output just went to 0, but now it's back at 10,000. Okay, yeah, it looks like Apple's numbers just came out and they're only down 1.5. If this is the worst that happens, if Apple only falls, 2%, then that's great for the market. Because here's the thing, we've seen this with Google. They're already at an all-time high. It's like the market, like before their last earnings, like they reported their last earnings, and their last earnings were bad. Then they had their AI presentation day, had some good product releases, and they just gapping up ever since. So like I feel like so much of this beat has already somewhat been priced in. So if they only fall 3-4%, that's like a normal day for Apple. That's why I was so shocked to see. Actually, I expected Google to kind of normalize back down to like only a 3% gain on the day, but they were already at an all-time high before the day. Yeah. Hey, yeah, Main Street Capital, we can look at that one too. Yeah, Google, I wonder if they're moving on the Apple news. Not really. I know Google and Apple sometimes move together. Um, yeah, Apple's now down 3, but Amazon's still up 9.5. Amazon's the real winner of the Mag 7. I feel like they're going to really be the first, maybe be the first to 10 trillion. I don't know. All right, we can go to Google right here too. So here's the crazy part. Let's go analyze Google's numbers. Is Meta a buy now? I think so. Meta is totally worth nibbling on right at this valuation. I own 5 shares of Meta. If I didn't already own 5, I'll probably buy one more share. But if I didn't own these 5 shares, it's worth nibbling at this price. They're trading at 23 times net income. Actually, let me see if I can pull this up on Webull, their forward PE. They might actually be trading even less than that. Apple's now flat. They recovered a lot of their gain. Oh, big candlestick on there. Earnings are so volatile. We saw that with Reddit already. That's why you can't trade these, or you'll get a headache. Like if you had puts on Reddit, you saw Reddit instantly fall 8%, and you're like, yes, Reddit's we printed, but then they completely reversed it and went up 14. Then you're like stressed, and now they're back all the way down, and now it's flat. So it always happens like that. So what was I getting to? Meta's forward PE. Let's see if it's loaded yet on Webull, because they normally, it's not loaded yet. But they trade at 23 times forward PE. Meta's a steal right now. So anyway, let's get back to Google right here. Let's actually check the AI news right here if there's anything it wants to highlight for us. Revenue of 103 billion with strong cloud and AI growth. Yeah. Gemini app reached 650 million users from the app store, like the app. Phone app, not even like the website. So the Gemini app reached 650 million monthly users with their cloud backlog at 155 billion. Google signs Anthropic AI cloud deal in the tens of billions. Like Google is just a beast of a company and never sell. They're an ETF and one, a huge cloud play, cybersecurity play with their $31 billion Wiz acquisition. They own YouTube. They literally own Android in the Play Store. So if you go spend $100 on the Google Play Store, they keep $30 of every transaction. They own Waymo. They're in quantum chips, TPUs, which OpenAI is ordering. So anyway, Google, the PE is a 27. I mean, that's a pretty fair PE. Look at this huge beat. So they expected 100 bill, they reported 102, but this net income beat was the best part. They expected 226, they reported 280. Same with the EBITDA, not just net income, but they expected 31 bill of EBITDA, they did 34. So this is insane. The net margin expansion, look, so the revenue's up 15.9, revenue's up 15, net income is up by 33. I kid you not, the net margin went from 29 to 35, which just adds money to the net income. I can't believe this. They're doing 25 to 35 billion plus a net income a quarter with the absolute fortress of a balance sheet. So what are they doing with all their leftover money? They legit spend 15 billion a quarter doing share buybacks. They also have a small dividend. The dividend only costs 2.5 billion. So look, they have so much leftover money. They could choose to 3 to 4x their dividend right now. They choose not to. Instead, they choose right now they have 15 billion of extra money a quarter, and or more than that, but they just spend it all on share buybacks. That'll eventually be swapped to dividends. That's what I've just seen. And these are the kind of monster dividend growth companies you want to own: Google, Meta, Comfort Systems, Amphenol. The dividend, you don't buy them. That's what I focus on specifically in my Robinhood portfolio. Companies right now with really low dividend yields, that they have the ability right now to 5x their dividend, but they choose not to. They choose to be financially disciplined, and they choose to do share buybacks, and they can buy other companies, invest in AI, all without having to dilute you or issue shares, because they can just use the money they make and invest in the business. Anywho, there's my rant. Let's go back to, let's see how the earnings are doing real quick. Meta's at, okay. Reddit's slightly up. Amazon's now up over 10. Apple's only down by 0.8. That's great news. Again, the stock was at an all-time high before today. So the fact that if it's not down 5%, then that's a great day. So, Cloudflare's up 5%. No way. This is your cybersecurity play. Literally, if you didn't know, 19% of all global internet traffic goes through Cloudflare in one way or another. Super, super overvalued though. Hey, Jello, what up, dude? So yeah, Brock said, can we see the all-time profit and loss? Heck yeah, yo, I love being fully transparent. Let me know which portfolio. Here, I'll just share all of them. So here's our Webull. We have so many different portfolios right here. This is our Webull account on the top left. Our open profit and loss, we're only up 21%. And this account, here's our daily. We're down 3.3% of the day, mainly from Sprouts Farmers Market, tanked us down 26% of the day. Only Disney and some other weird names on the screen. Here's our Moomoo portfolio. If you look at the top, it's called our buy never sell account. All time, we're up 13K, and on a percent weighted, we're up year to date, we're up 83%. And this is our buy never sell portfolio. So our other portfolios have done nowhere near as good, but we're up 180% all time versus the S&P 500 up 62. Mainly all those gains have literally come from Comfort Systems, Powell, and Amphenol, because we bought all of our shares of this stock this year, and they just continue to gap up higher. Powell Industries hit an all-time high yesterday. They're a beast of a company. Amphenol, and Amazon too. Amazon, we're up $235 on them today. Okay, let's keep going. Yeah, if you're wondering what happened, yeah, these companies, the reason why they move so much, actually check this out right here. We got some red flags for the consumer today. We saw Sprouts Farmers Market down 26, Chipotle down 18, eBay, Roblox, Carvana, all these consumer discretionary kind of exposed stocks are tanking. Kava, Wingstop, so that could be some bad news on the consumer. We also, I wanted to get to Kathy Wood's Roblox stocks. So yeah, that's a big Kathy Wood play. If we go to Kathy Wood's portfolio right here, her fourth largest holding is actually Roblox, and it tanked 15% of the day. Let's see what the news has. Strong user growth and raises full year guidance. So one thing I don't love about Roblox is the fact that they lose a bunch of net income, and that's what I'm going to guess happened. But here's the best part about Roblox is their daily active users, not like monthly users, but daily active users is right here, 111 million. So it's at 111 million when this exact same time last year, it was 79 million. So let's hope that's not propped up on AI bots. That's great daily active user growth. But let's check out net income losses. So they actually lost less net income than expected. That's great news. Because if we go to their net income down here, here's what I always didn't like about Roblox. They legit lose 200 to 300 million of net income a quarter. And they have a lot of liabilities and debt to pay off. So I love the growth. Like the growth is there. The user growth, the revenue growth, the free cash flow growth, but the net income growth because of their stock-based comp. Remember, if we go to their FCF, it's super positive. Free cash flow looks great. Remember, free cash flow does not include non-cash expenses like stock-based comp. Stock-based comp is included in GAAP net income because it's basically, instead of paying a company with cash, you have to pay them with stock. So it's still technically a loss they have to include on their GAAP net income. I'm glad it's included. So anyway, Roblox, I don't know. I wouldn't buy the dip on them yet, but they're interesting. Meta or Microsoft to DCA? And dude, the answer is both. You buy both. Let me go back to see how Apple's doing. So Apple's now green, very slightly green. Amazon continues to gain, up 11.5. No way. Rocket Mortgage is up 5. Coinbase is flat. So that's it. Oh, yeah. Main Street Capital. Yeah. Hey, Tommy, real quick. This is, by the way, if you're looking for a higher yielding name, this is one of the few stocks that actually pay a monthly dividend. So if you're looking for a monthly dividend paying stock, this is one that actually has a sustainable one. You get a 5.4% dividend, a 5.4% yield, and they pay monthly. This is a BDC, which stands for a business development company, kind of like Blue Owl Corp, where literally by law, they have to pay out 90% of their taxable income in the form of a dividend. So whenever they receive the money, they don't pay income tax on it. And so whenever you receive that money, you're then paying the income tax on that money. But just from the REITs are structured the same way. So you are paying a higher tax whenever you receive that money than you would on a normal stock. So that's why it's also beneficial to own it in a Roth IRA. But anywho, yeah, I love that one for the sustainable monthly dividend because they're a BDC. All right. Are you allowed to look at MO? Yeah, let's look at MO. Actually, the great news for I can't cover this industry, but MUSA said they had I'm talking like insane demand growth from their convenience stores from MO products, if you get my drift there. But MO stock did terrible. Let's check them out. This is a basically dividend play. You buy this to maximize your dividend income. So and they have a sustainable dividend. This has a better yield than Main Street Capital, and it's a qualified paying dividend. So for me, if I literally bought if I put all my portfolio, if I put my money in Mo Altria Group, whenever would receive dividends, it's completely tax free because they pay a qualified dividend. And here's what I mean by that: if you make under $50,000 a year, which is me, I make under $50,000 a year, and you receive a qualified dividend. If you receive a qualified dividend, it's taxed at long-term capital gains, and long-term capital gains is taxed at 0% if you make under 50K in the US. Anywho, but this is a 7.14% dividend, and it's actually sustainable. But it's just the industry and the slow growth that people don't like. Like if you go to the revenue, it's kind of like an industry that's like a slow bleed. Like look, the revenue, the sales, the lifeblood of the company, it's down 1.7 after it fell 5, after it fell 4, after it fell 4, after it fell 4. So it's a lot of red on the sales, but they have a sustainable dividend. Like they're still printing money, $1 to $3 billion of after-tax net income a quarter. So they made $2.5 billion in net income this quarter. How much did the dividend cost? Let's see. The dividend only cost $1.72 billion. So the dividend only cost $1.72 billion. Since they have some leftover money, they're doing share buybacks. So they're even doing a couple $100 million share buybacks a quarter. So yeah, you're kind of just buying it to maximize your income. Again, you don't really expect this to outperform the market in the long run. They're the same price as they were in 2015, but that 7% dividend is huge. That's what you're really hoping for: 7% dividend, and then just 1 or 2% stock price appreciation, and you're chilling. Check Riot Platforms. Yeah, hey, these I never recommend these kind of stocks. So, actually, let me pull up Bitcoin next to this. This is a Bitcoin mining company that's like slowly transitioning into like a data center hosting company. Basically, this stock just owns a bunch of GPUs, but there's not. I would always recommend actual Bitcoin over the Bitcoin mining companies because I don't really ever see the Bitcoin mining company. Yeah, like if we go, where did this company's revenue come from? 92% of it is just Bitcoin mining. So they literally just follow whatever Bitcoin does. But what I notice is Bitcoin always outperforms the Bitcoin mining company. So I'd always recommend actual Bitcoin over them. Hey, what up, him? Someone said, Train Technology came out. They initially fell. Oopsie, did I just unplug my mic? Okay, no. They initially fell on earnings. I watched it because I was curious. They fell to 405, but now they're up 4% of the day. Let's go check out their numbers. I love this company right here. I think they're a never sell. They're recession resilient. So they revenue, they slight miss on revenue, a beat on net income slightly, and a slight beat on EBITDA. So look at this net income, and this is updated. They're doing insane net income numbers, close to $1 billion of net income a quarter. And at this growth rate, it'll soon get there. But nice dividend too, near 1% dividend. Let's check out this other one right here. They're kind of like a big modular HVAC play. AMTM. So this is Momentum Holdings. I've not heard of this company before, but they're worth $5.3 billion. So a $5.3 billion company. They IPO'd not crazy long ago. They're in global engineering solutions and digital solutions. Do they make money? So they do. That's crazy growth, actually. The sales are up 66 after it grew 52. So they're actually on some nice growth, and they're just now getting net income positive for the past 4 quarters. I mean, they're pretty much making net income every quarter. Like something happened to their balance sheet right here. Their assets rocked up higher. So that's interesting. Specialty business. Momentum, critical mission and cyber. Let me click on their website right here. Advancing nuclear resurgence. Anyway, I don't know. I like the growth of their sales. They're not making too much money. Can you explain Apple? It's up now. Well, sometimes, whenever a company reports earnings, it takes a while for the market to actually digest the numbers because sometimes it's just an algo that sees a big net income loss, but then later it says like, and they explain it away anyway. But yeah, look at Apple. They're now up 3.3%. I mean, they're already at an all-time high, and they're at 280 right now, which is a new all-time high. Apple's never been higher than where it is right now at this exact moment. Same with Amazon. Amazon has never been higher than it was today, and same with Google. Google's the highest price it's ever been, but I can't say the same thing, sadly, for Meta. Meta is down bad a little bit, but I'm actually, if not financial advice, if you don't own Meta, I'd add them to the watch list. They trade at 23 times PE. This is the kind of stock that I'd own, and I do own them. So yeah. Joseph, do you own? I actually do not own CubeSmart anymore. No, but I love that company. Dude, I was actually just looking at extra space storage and buying CubeSmart. App name. Oh yeah, hey, by the way, if you want to get this app I'm on, it's in the link in the description. Or oh wait, you're on the YouTube stream him. Yeah, hey. This is a brokerage right here. These are all brokerages. I'm not sure what app you're talking about, but all these apps are all in the link tree in my bio. Uh yeah. Moomoo, Weeble, Robinhood. Okay, let's see here. But this app I'm on right now, yeah, the one I'm on right now is in the first link, is the very first link in the link tree in my bio. It's my favorite one. It's free brokerage, costs nothing, lowest fee, no commissions at all. I like to keep my idle cash in here. I have $230 of cash, earns me a nice 3.6% APY. And yeah, I just keep my buy and never sell portfolio in here. Full disclosure, they're all those links that they're all affiliate links for all these brokerages. Yeah, like here's the thing, like with Robinhood, you have to pay $5 a month to get this APY, but with Moomoo, it costs nothing. It's free. I love doing analysis on here. Anyway. All right, so Rocket. Yeah, let's go check out Rocket. Then we'll get to SoFi stock. So Rocket Mortgage is up 5%. Let's go. So their numbers just came out. This is, they own Redfin and Mr. Cooper. They reports adjusted EPS of 7 cents. Consensus was 5. So that's a 20% beat. I get, but the EPS is so small. But yeah. So, yeah. Amazon's up 12. Apple's up 4. Yo, congrats if you own any of these. That's going to just send up the S&P 500. Yo, if you don't even own those two individually, and if you just own the S&P 500, congrats if you own the S&P 500, because those two just make up like 15%. Anywho, let's get to SoFi right here. I'll be quick about this one because we already looked at them. They reported earnings yesterday or the day before, and they were great. I'm talking like phenomenal earnings, but the reason they're down on the day is because they're still super, super expensive. Like even right now after the dip, they traded like 80 times next year's net income. So they're a bit expensive, but here's why they deserve that high premium. And they're not just propped up on momentum like a lot of stocks are. They have real fundamentals that justify it. We got, they're a fintech. They have their own banking charter. We go to their financial services business. This is what's insane. No one expected this. The revenue's up 105, after it grew 80, after it grew 244, after it grew 444. Like, they're on an insane growth streak. It just hits a new record every year, every quarter. And, not just, here's the analyst expectations as well. Every quarter, that's the orange line. The orange line is what the analysts expect, and they beat on revenue every quarter. They beat on EPS every quarter and on EBITDA. So that's why I think people are taking SoFi serious. 140 mil in net income this quarter. All right. EME, they dipped. Yeah, dude, EME is literally, that's what sent Comfort Systems down. EME stock and Comfort Systems literally do like exactly the same thing, or they usually move identical. But yeah, they like missed by like 1 or 2% on their number. They're actually, I love this company right here. MEP play, mechanical, electrical, and plumbing play, HVAC play. That's what they do. And they just barely missed. They beat on revenue, they beat on EPS, and they beat on EBITDA by like 1 to 2%. So I think they slowly lowered their guidance. I don't know. I would look into them. They're a great dividend growth stock. I mean, a great one. All right. STLA, they own Dodge. Earnings came out. So yeah, I don't love this industry. So car manufacturing, I think you might own Ford too. I just don't love this industry. Like this stock right here, Stellantis, is the same price that it was in 2006. So if you bought Stellantis, and they have a small dividend too. What is the dividend? Let's see. Wow, that looks unsustainable. As you know, when a stock price goes down, the yield goes up. They have an 8% dividend. Let's see right here. Yeah, I don't think they're headquartered in America. They're headquartered in the Netherlands. So this is a Netherlands company. They did. Oh wait, this is in 2020, so we didn't even get their most. Oh, here are the most recent numbers. Not. Anyway, I don't know. I don't love that industry. Apple came out with nice results. It's up a bit. Yeah, here's everything that came out today. Reddit was slightly up 2%. Amazon's up 12. Apple 3.5. Zillow's flat. Their numbers came out. GoDaddy's flat. First Solar's now green. No way. They were just down 5%. This is my favorite solar play out of all the solar stocks out there, just because they're the most profitable. Like, I look at all the other solar stocks out there, all of them like lose money. But this one prints like 300 to 400 mil a quarter. So there is some little bit of strain around the and solar incentives being taken away from the Inflation Reduction Act. Hey, I'm actually looking. I hope this stock misses on earnings or something so I can buy the dip on them. Republic Service, non-GAAP EPS of 190 beats near the lower end. So it looks like okay, I'm actually looking to potentially buy RSG, just a high quality stock that you just never sell. They're just like a waste management, throw away your trash for you. Cloudflare, the cybersecurity name, is up 7.5. 18% of all global internet traffic goes through them. Coinbase is flat on their earnings. Probably some slower growth or something. So, all right. Lululemon, yeah, Lululemon's a kind of a junk. All right, they're not a great stock that I trust a lot of money in. Like, I'd maybe buy the dip on them. Like, it's not one of the worst stocks to buy. Like, they're like an okay stock to buy the dip on, but I don't love them. I mean, they just sell a commodity. They're kind of losing their brand a little bit. So if we go to their comp sales, their comparable sales, their North America sales, it only grew 1% year over year. So, the sales are kind of slowing a little bit. Plus, they lowered their guidance from inflation costs hurting them. Let's see. Puma, that's Puma. Puma announces 900 job cuts. Yeah, Lululemon partners with NFL for 32-team licensed apparel collection. Hey, that's pretty cool. But here's the other thing. So the net income or the sales are up year over year from the international growth. The revenue's up 6.5, but the net income is down by 5.6, which means the net margins are falling. The net margin fell by 12% year over year. But this is the good news. They still print money. They still make 300 to 400 or to 500 mil of net income a quarter. And so they just spend it all on share buybacks. But there's a lot of concerns there, like so prone to like consumer changes, and I don't know if people still like Lululemon or anyway. The quality of the products have gone down a little. I've noticed too, just from this one pair of pants, these two pants I have. But anyway, here's Rocket Lab right here. Rocket Lab, this is my favorite space stock right here. But I wouldn't buy them at their current valuation, but I put them on the watch list. Yeah, hey, Rich Tech Robotics, I don't love that one. Yeah, I'd probably sell out of Rich Tech Robotics for a little bit of profit, or sell most of the position and keep a little bit as like a fun. I'll go over Rich Tech after this. But yeah, here's Rocket Lab. I think they just got some new contracts with Japan and NASA. But let's see. Here's what I like about this company. If we go to their space systems revenue right here, it's really growthy. It's up 27, after grew 95, after grew 9. So that's really growthy. And also their launch services, it's at a new record this quarter. It's up 58% year over year to a new record. It's never been 46 mil before, so that's at a record. They also just acquired Geost and some other company. They're beating on analyst expectations every quarter. That's why they're gapping up on earnings. Unfortunately, they're still burning through a lot of money, 50, 60 mil a quarters. We do want to see them narrow these losses, but as long as they can keep up that growth rate, I do like them. All right. Let's go back over here. Yeah, Apple's now up 4.4. Reddit's up 4. Rocket's up 5. Cloudflare's up 7. Hey, today's a crazy day. All right. I wonder how. Actually, let me go check out the QQQ real quick. That probably is rallying up. Yeah, look at the Qs. Literally just since Apple and Amazon are two of the largest holdings in there, it's sending it up 1% after hours. Wow. Adobe stock, yeah, Adobe's kind of being hurt by the AI thesis. So we'll look at AVAV too. So Adobe right here, Figma, actually, Figma's also at like a new kind of 52-week low right now, or all-time low. They literally just IPO'd, but this is true, all-time low on Figma stock. But this is a competitor to Adobe. But Figma's an interesting name. But Adobe, yeah, getting hurt from the AI. Oh, and there was some news today. Oh, Canva. Okay, yeah, Canva. If anyone's heard of Canva before, they released all of these tools that it's like a free Photoshopper, like AI, like content awareness replacement things, like all for free, like free tools. And that's why today at one point there was, it's kind of hard to tell because I'm not zoomed in that much, but it instantly tanked the second that news dropped, like a big chunk. But anyway, it since then recovered all that. But it's the future uncertainty that's really hurting Adobe. But yeah, for right now, here's the thing. I'm a believer that humans are always going to need the final touch on art, and I think this will get priced from a AI loser to a slight AI winner. Now that being said, I wouldn't trust a lot of money in this name. I wouldn't have it as a huge size position. I'd probably just keep it as a small position. As much as I love that thesis, but yeah, the numbers look great. They're making 1.7, 1.8 billion in net income a quarter. They don't have a dividend either. So what are they doing with basically 2 billion in net income a quarter? Well, they're just spending it on share buybacks, spending 1.5 to 3 billion in net income a quarter on share buybacks. Here's what it does for you as a shareholder. The net income is up 5, but the net income per share is up by 11. Remember, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes the EPS growth rate is if they either dilute you or buy back shares. And in this case, they bought back 6% of the shares. Insane. I honestly think Adobe should buy a company, buy a cool stock or something. All right. AVAV, let's check that one out. So Aero Environment, they are on my watches. Marvel is up after hours. Hey, did they report earnings today? I didn't actually know that. Maybe I could type it in Robinhood because I don't want to do it over there. Yeah, Marvel's up 5% after hours. No way, dude. Heck yeah. Congrats if you own them. Let me check Apple real quick. Apple's up 4.5. Amazon's up 11. Reddit is now up 6%. They had phenomenal numbers, like 160 million net income, I think they made. I just can't. Ad revenue up more than 50%. Reddit's international user growth boosted by expanded AI translation. That's really cool. That's pretty cool. EPS of 80 cents versus the 52 cents. That's the same thing as 160 million net income. That's crazy. So we'll get into Reddit a little later. They initially tanked like 8%. We watched it. They fell 8% on earnings, but now they're up. All right. Y'all can't hear that dog, can you? Okay. Back to AVAV though. What I like about this stock is they're on my watch list as well because I do really like this name. They have this autonomous systems business that's up 50% year over year. Basically, if we go down here to the revenue, we can see this is the crazy part. The revenue is going to go from 167 mil to 504 million, like a crazy increase year over year. So it's just a lot of future growth that's being expected. I think look at this acquisition they went through. So if you're wondering why did the assets just go from 1 to 5 billion? Well, they just bought a company here. So you can tell, you go to the cash from investing activities. Again, if they buy an asset, buy a company, buy land, whatever, it goes negative on here. You don't want to see this positive. That means they're actively selling out of their assets. But yeah, they spent 900 million buying a company. That explains that. So anyway, that also explains why the growth was so growthy and explains kind of why the net income went negative. So they're a cool one. I think there's just going to be a lot of future growth. All right, we'll look at a few more stocks here. Then I got to run, but I appreciate y'all being here. Let's see right here. EQT. EQT Corp. Let me see something. Okay. So EQT stock, I've never heard of this stock. They're a $32 billion company. 1.2% dividend yield. Yo. Whew. Someone said you got my follow. Hey, I appreciate that. Yo, if y'all want to hit the follow button, we stream every single day, sometimes twice a day. All we do is just look at stocks. I sell nothing. I have no course, book, WhatsApp. Never follow you or DM you or nothing like that. Whoa. Gee, I'm probably going to end the stream after this. But yeah, these year-over-year growth rates are crazy. The revenue is up 53% year-over-year. Last quarter, it grew 170%. And look at this net income. Let me turn on my fan real quick. Yo, we'll probably stream for that. But I'm out of breath now. I should not have ran like that. But yeah, they're making good net income. I turned on my fan, so we're good now. Yeah. Yo, I just ran up the stairs to close the door because I could not focus with that dog barking. Hopefully none of y'all could hear it, but it was making me lose my concentration. Okay, someone said loaded up on Meta today. Yo, I think that was the right move. Loaded up on Path today. Yo, Reddit's now up 7%, Amazon's up 12, Apple's up 4%. But yo, if we go to UiPath, that's one of our bigger losers in our Webull portfolio. Check this out. UiPath, we're down 24% on them. And right next to our huge Sprouts Farmers Market loss. Yo, this is why you got to be careful, have a diversified portfolio. Don't listen to me. I'm not an expert. But yeah, Sprouts Farmer is down 25% on the day. We're down bad on Zoom and some of these other names. But yeah, we're down 2.87%. All time, we're up 21% in this portfolio. But yeah, that's insane, some of these moves we've had on earnings today. What's the app? Yo, LJ, I'm not sure what app you're talking about. I think you're talking about this one. It's in the link tree in my bio, the very first link there. Yo, Isaiah, dude, Isaiah and Sexy Lexi. I didn't even see that. Yo, thanks so much for the gifts there. I really appreciate that. Yeah, let's do AbbVie stock right here. So AbbVie, this is a great phenomenal dividend growth company, in my opinion. Like, it has a good yield and it's going to continue the growth. If we go right here and look at the dividend, they have a 2.8% dividend yield that's completely sustainable. So in my opinion, you should get like 3% in dividends and then like 4 to 5 to 7% returns in stock price appreciation every year. Because if you go to their main prescription right here, Skyrizi, like, I can't believe this. The revenue's up 62% year over year. After it grew 45, after it grew 50, after it grew 85, after it grew 104. They're on an insane streak of growth. I mean, look at this on an annual basis. In 2019, it was 300 million of annual revenue. Now it's 11.7 billion. It just continues to grow. And that's just one of their prescriptions right here. They also have Renvoc, whatever this is, never heard of it, but look at that. Same here. 2019, it was 40 million of revenue. Now it's 5.9 billion. I mean, the growth rates are just insane. So yeah, that's what's really cool about this one. They had a little one-time adjustment because of the this one prescription loss thing that they had. So that's why the PE is kind of artificially high right now, and the payout ratio is artificially high. It's not really that high, but yeah. All right. Someone said SFR stock. SFR. It's on the Australian Stock Exchange. So this is Sandfire Resources. Yo, this must be the one you're talking about. They're at an all-time high. So yo, congrats if you own this one. You know, you got to be up on your position. They're a $7.5 billion company. Looks like they're they're a copper company. So copper operations, that's cool. So that's an interesting commodity. I do like copper. For the fiscal year 2025, they did 90 million in net income, a lot better from the losses they were having. So yeah, it looks like an Australian copper play. Yeah, if you're looking for a copper play. Do you use margin? No, I've actually never used a single dollar of margin in my life. Would not recommend that. You know, I sometimes get the argument like, hey, I can take out margin debt for 4% and invest it in this asset and get 10%. Oh yeah. I just don't want to take out debt to buy stocks. But yeah, I do have access to it, but I don't do it. All right. You see them beating the earnings tomorrow, going up a lot? Yo, I hope so. Like, that'll be really interesting to see. Yeah, I didn't even know they reported. Let me actually put them on the top of the watch list for their earnings. Yo, today we had a lot of earnings. You know, Reddit is up 6%, Amazon's 12, Apple 4.3. First Solar's up 2.5, Rocket's up 6, Cloudflare's up 7. So just a lot of growth. But also a lot of red. You know, we can look at Sprouts Farmers Market today. Sprouts Farmers Market fell 25. If we go to Meta, and actually I think Meta's worth looking into to maybe buy the dip on. Meta fell over 10% today. Yeah, Google did great. I mean, Google's earnings were phenomenal. We're also a shareholder of them. Here, yo, this is our dividend-only portfolio. Every stock in here does pay a dividend, but yeah. What's the bet for? Oh yeah, that was AbbVie, ABBV. You know, it's tough. Actually, we can see what reports earnings tomorrow. We just go to the earnings hub right here. If anyone likes, you know, I don't like buying the day before earnings. So yeah, Friday, looks like we get Exxon and Chevron stock. Well, let me search by watch list. Let me see if that'll be, not really anything. So AbbVie, T. Rowe, Carlisle. All right, whatever. All right. Yeah, basically today and yesterday were the big days. So yeah, had a nice leverage long on Google. Well, hey, but that worked out for you. Yeah, Eli Lilly had great earnings. Eli Lilly doing great should be good for AbbVie to potentially also do really good. I'm up 20% on Amazon sell. No, man, Amazon is a never sell stock. I'm up 30% on Amazon. I'm not taking a single dime of profit on them like ever. Uh, you know, well, maybe it's worth to trim it, but never fully sell out of Amazon. I mean, they're the kind of stock that's just going to continue to climb and climb higher forever, I think. Not financial advice, of course, but yeah. What was that last stock? Oh, that was Sprouts Farmers Market, I think. SFM. Um, that was the one that was down 25% on the day. Yeah. Thoughts on EW? What up, Luffy? EW stock. Um, Edward Life Sciences. So they're a $49 billion company. That's a heck of a market cap. They're the same prices they were in 2019, though. Do they have a good dividend? No dividend actually on this company. Uh, Transcatheter orotoric valve replacement. Surgical structural heart. So, that sounds interesting. So, the revenue of 1.5 billion and the net income's crazy. They have a good net margin. Yeah, 22% net margin. They had a little one-time adjustment that one quarter, but phenomenal balance sheet right here. Uh, yeah, if you go to their net income, the reason it was so positive is because we go to their cash from investing activities. They sold off an asset for 2.7 billion. Maybe it was a low margin business or something. Who knows? But yeah, these numbers look good. I mean, they beat on every metric. They missed on their net income this quarter, but uh, anyway, yeah, 11 times net income. Here, I'll show you some stocks recently as we get to basically ending the stream. Here, I'll show you some stocks that I find interesting right now. I have a Chinese stock for you after this one. This is Vita Coco, 45% market share for coconut water, completely debt-free, making like 20, 30 mil in net income a quarter. So if you want to bet in the most competitive industry beverages, check out Vita Coco right here. But they're different because they own Vita Coco. It grew 41% year over year. Whoa, look at that. It was a big beat. They have no debt. So that's a cool company. Also, this is a stock I found out today. It's a Chinese company, and I will never own this stock personally, probably. But I found this one interesting. They just sell a bunch of commodities, but these are the kind of things that have like pricing power right now, like air conditioning units. Look at the growth on this one. Just hits a new record on the air conditioning every year. The washing machines at a new record right now. Kitchen electricity at a so I don't know. It just seems like refrigerators. I don't know, just some basic commodities, and they make good net income. When we go to their net income down here, actually, we'll convert the currency from Chinese yuan to USD. They're making 700 to a billion, and this is converted to USD of basically net income a quarter. Interesting company, and you get a 3.74% dividend yield. That's some random Chinese stock, ticker symbol 600690. So yeah. Another one I found really interesting, they reported earnings today, is Republic Service. They're a trash business. They do trash. Oh, Mondelez, they own so many cool brands. Oreo, Chips Ahoy, Toblerone, Sour Patch Kids. A lot of brands you probably know and love. So they have a nice dividend as well, a 3.3% dividend. Actually, let me see if I can find their family of brands kind of picture here. If I click on their website, will it show me all the brands? I guess they own Triscuit as well. Oreo, Belvita, Cadbury, Philadelphia cheese, Halls, like Milka. They own so many brands, like high quality brands, which I like $1 billion plus brands. Okay. Thought I cut to Amazon after hours. Yo, heck yeah, Charles, dude. Amazon's going nuts. Would you still buy Meta? Absolutely, I would buy Meta. Let's check out Meta real quick before we end here. So, Meta, again, the only reason not only reason, but they had a $15.7 billion one-time tax adjustment. But let's see right here. Oh, yeah, and an increased infrastructure spending. So they said like notable higher CapEx spend in full year 2026 versus 2025 that they're going to project. But if we go to the net income right here, at first glance, this is the bad news. If you go to their net income, please. Yeah, their net income fell to 2.7 billion, but as we know, that was a one-time adjustment from their tax charge. It was really $16 billion plus higher than that. We can tell by the operating profit because the operating profit was up for the record, a Q3 record, up 18% year over year. So yeah, Meta, I just love them for all the stuff they own. Facebook, Instagram, WhatsApp. They just now introduced ads to WhatsApp. They own Threads. Threads now has near the same amount of daily active users as X does. They look at their active users. They legit have 3.54 billion daily active users. They have the new Meta Ray-Bans, Meta Oakley, where you can like scroll through Instagram Reels on the glasses. It's kind of cool. So, uh, yeah, we have not looked at Tesla yet. Yeah, let's check out Tesla right here. Tesla's up a little bit. It's a tough buy in my opinion for Tesla just because of how expensive they are. Uh, like 300 times next year's net income, or well, here you're basically paying $200 the stock price as future growth that's going to come from robotics and robo taxis, which I think it's hard to pay, but this stock is just like a mind of its own. It doesn't really matter what the fundamentals are. I think there was also Elon hinted at like a new. Tesla faces regulatory hurdle in its multi-state. Oh well, that's not good. Thought that was the good news. Anyway, there was some like reveal of like a new taxi thing. Anyway, vehicles delivered we can see was actually good year over year. It was up 7.39. But anyway, they lost the growth. If we go to their main business, their automotive segment, they reported earnings since then. Actually, let's check that out. So the sales did grow. Yeah, the sales are up 11.5, but the profits fell by 33, net income by 36. So they did lose their margins a little bit. But yeah, it's tough. This is nearly the same market cap as Meta. I mean, it's only $100 billion difference. Meta and Tesla are worth nearly the exact same, and Meta makes 15 to 20 billion of net income a quarter, and they still have to like 5x from. Tesla's not one I'd keep a lot of money in, but it's certainly done great. Like, even though I say all that, like, if you've owned it before today, you've done amazing. But fundamentally speaking, I don't love it. Oh, I love Grab stock right here. Oh, Archer Aviation. Yeah, I'd be careful. That's a revenue-less company. That's a startup almost. But we'll get to that one probably. So, hey, what up, Matt Man? I appreciate that. Going to use your. Hey, thanks, Matt Man. I appreciate that. Thanks so much. Yeah, if you want to get this app I'm on, use my affiliate link. It's in the link tree in my bio, the very first link there. Yeah, it's a brokerage. Yeah, if you want to buy stocks, it's my favorite app to buy stocks on and analyze stocks on. Link tree in bio, first link. But here's Grab Holdings. What I love about this stock is the fact that it's backed by Uber. Oh, speaking of this app, by the way, if you use my affiliate link up there and you go and deposit $100, we'll both get some free stocks. One of the free stocks I got was Grab, and I sold it back here. I also got like a free share of Ford and Kraft Heinz and stuff. But anyway, we go to Grab right here. What I love about, if you're wondering what is Grab, they literally do exactly what Uber does, but in all these other countries, notice the US and Canada aren't on here. Malaysia, Indonesia, Singapore, Philippines, Thailand, all these other countries, they do exactly what Uber does. And Uber loved them so much that they decided to buy the company, or buy a big chunk of the company, be the largest shareholder. Uber owns 13% of all the shares, and Toyota Motor owns 5.5% of all the shares. So they're backed by some good people. They have no net debt. They're making net income every quarter, free cash flow every quarter. So that's one I actually do like, and I'd put them on the watch list. Oh yeah, let's look at Bulls. Oh wait, let me look at, or we'll be really quick. Wait, was it Joby? Or which one was it there I wanted to look at? Or Archer ACHR. And it's the same with Joby Aviation as well. The stock's done good, and I hope it does good for you, but I personally don't buy these kind of stocks just because they have no revenue. It's just hard to trust these names. Like just logically, just think about this. We go to the revenue, it says no data because this is a startup, or they've never sold anything. They've never sold a product or service. So they sell nothing. They have no revenue coming in, and they lose 100 to 200 million of net income a quarter. So it's a tough buy in my opinion. But if you're wondering, how does the balance sheet, like, they lose 200 mil, or they lose 100 mil a quarter, how are their assets going up so much? They're diluting the life out of you. They just diluted you by $1 billion this quarter. Oh, Stellantis is the largest shareholder, but every time they dilute you, there's no revenue, they burn money. It's a tough buy, I think, fundamentally. So let's look at Bull stock right here. Yeah, Bull is interesting. They actually just brought, they brought the prediction market to Webull. I wonder if I can like I forget what button oh yeah. Look right here. If you look at the very middle of my screen here, it says new this market. This is what's making Robinhood a boatload of money. Because remember, whenever you go and buy and sell a stock, they don't make any commissions on that. Like they're making like half a penny or something every time you buy and sell a stock. But whenever you buy and sell crypto and buy and sell these prediction market stuff, they make bank. They make like a good amount on every transaction. So that's where the money's being made for the brokerage. And that's why Robinhood's printing money right now. And I think Webull or Bull stock can follow in the same direction if they can have the same successful results. Like there's already 4 billion Robinhood contracts traded on the prediction market. Yeah, Webull is struggling right now. Hey, I'm on the Webull app right now, but I like this one. It's a growth company. I would actually buy them right here, but I wouldn't have it as a huge size position. I would nibble on this company. I'd buy a little bit amount of shares. I wouldn't trust a lot yet. I like FUTU a lot more, FUTU stock. But look, the growth is here. The revenue's up 45, 30, 28. Still struggling a bit with net income, but they're barely losing any money. And with the new crypto and prediction market income, I'm sure they're going to make a lot. Whoa. Dude, Amazon's up 14. Look at that. Wow, $255 a share. Reddit's up 5.5. Apple's up 4.5. Is anything else? Cloudflare's up 7. Yo, let's go. Yeah, Amazon to the freaking moon. Yeah. What up, Daniel? He said AMSC. AMSC. Is that America's Superconductor? AMSC. Hey, what up, Christian? Good to see y'all. All right, this will probably be the last. All right, sadly, this is the last stock we'll look at. Then we'll do a stock portfolio update. Then I'll get out of here. By the way, if you want to hit the follow button, we stream every single day, usually around the same time. We stream every single day. I sell nothing. I have no course, book, WhatsApp, Telegram. I sell nothing. I'll never follow you, DM you. Just on your give my opinion. And if you do want to support me, the number one way to support me, if you wanted to, is just subscribe to my YouTube channel. I'm like 600 subs away from 10K on there. So yeah, my YouTube channel is called Nathan Roberts, also in the link tree in my bio. You can just type into YouTube Nathan Robert. I'm also streaming on there. If you missed anything, you can replay it. Sometimes I talk too fast. I'm sorry. But yeah, American Superconductor, I love the stock right here because they're only worth $2.66 billion. That's why I think there's more upside potential in this name. They're worth $2.66 billion and they're really growthy. The revenue is up 80%. Last quarter is up 58, 56, 60. Phenomenal balance sheet. The assets are growing and the liabilities stayed the same. So they're deleveraging. And not just the top line that's growing. So the revenue's up 80, but look at this net income. Again, they just now got net income positive. They used to lose a couple mil a quarter. Now they're finally in the point where they're making net income every quarter. And at this growth rate, what's it going to be the same time next year? So, yeah. Hey, what up, Adrian? All right, so yeah, American Superconductor is pretty interesting. All right. Rocket, yeah, that one, Rocket Mortgage should be interesting in a lower interest rate environment. Hey, what up, Charles? Yeah, the money printer. Yeah, Jerome Powell turned on the money printer for Amazon. Yeah, here's our all right, so let me give you a quick portfolio update. This is our dividend only account. We're down 2.5% on the day, but we are recovering a little bit after hours. Yeah, Google is like our only green stock. Google and McDonald's. Yeah, Meta fell 10%. That's in our portfolio down. I would buy the dip on Meta. We looked at Meta. If you missed anything, by the way, we've analyzed Meta a few times. If you missed anything, you can replay it on YouTube. We looked at Meta a few times. And yo, Apple up 5 and Amazon up 15 is sending the QQQ up 1.2% after hours because they make up such a large weighting. We also have a Roth IRA. Our Roth IRA is up 1.5, really from Perimeter Solutions. I didn't believe it. They got the Robinhood slap of warning. Experienced a lot of volatility. It's at an all-time high, so I guess the good volatility. But yeah, we're up 20% on them. And we also here's our buy never sell account. Our Moomoo account where what's up buy stock in here, try not to ever sell it. And yeah, Amazon's the big leader, up 35% all time on them. Most of that's today because they're up 15% after hours. But yeah, Amphenol's been incredible. Comfort Systems, Powell. And I'm actually looking to buy a little bit more Murphy USA. They fell 7.5%. And then finally, we have our risk on Webull account. We're down 3% on the day. Check this out. Yo, leave a like on the stream for me before you go. Because look at this. Sprouts Farmers Market's down 26. AMD's down 2. FUTU 3. SoFi 5. Actually, this looks a lot better than what it was. just a little bit ago. So yeah, I guess because the market, yeah, Amazon's up 14, Reddit's up 6, Apple's now up 5. We watched it live. We watched Reddit fall 8. We watched Apple fall 3 before these numbers came out. But now they're doing great. So anyway, I'll see you all in the next one. Hope you guys have a great rest of your day. Good luck with the earnings out there. And we'll be live tomorrow. See you very soon. Hey, hit the follow button too. Oh, yeah, all the apps I'm using, someone asked, all these apps I'm using, all these brokerages are all in the link tree in my bio. First link there. Hey, I just subbed. Looking forward to see what you teach. Hey, thanks so much, Pinky. Yo, by the way, I don't teach, or I just do the live streams to teach. I don't have any personal course, book, WhatsApp, nothing like that. But best way to learn is just watch the streams, watch my YouTube videos. Hey, Bright Paul, you're still here. Thanks so much, dude. See y'all very later. I can't believe today.